All right, good morning, guys. We had a crowd in here. Did I kick everybody out? I may have. I may have. I came in and it wasn't responding. Good morning, Bobby T. Um, so I had to get out and get back in to start the classroom. So we'll give it a second, get people in here. Good morning, Sophia. Nice to see you today. I see Alan's in here. Miss Donna, great to see you. Am I in live? No, it looks like I'm in education. Am I not? Oh, I'm in live trading. Whoops, I'll be back. My bad. Let me disconnect. All right, good morning, everybody. I just went and tried to get into live trading. I was trying to teach class in the wrong room. Um, it's kind of funny. Good morning. How's everyone doing today? Super shark. I like that. I came back in. I was like, holy smokes, there's nobody in my classroom today. And it turns out that I was in the wrong room. So it happens sometimes. It does happen. Guys, I hope everybody's doing amazing today. Hope you're excited for the day. The market is already moving 1,000 times better than it was yesterday. Yesterday was a test of patience. Yesterday was really, oh my gosh, if you sat on your hands and you were patient, it turned out well. Amen, Cav. Every day I wake up, I'm thankful. That's really all it takes for me at this point. And if I can feel all of my extremities, then I'm ecstatic. So it's good. Guys, I'm excited to have you in here today. I'm excited to be here today. I'm pretty stoked on the classroom. Just feeling good. Yesterday after class, I sat for about an hour waiting for a trade to set up. And then once it finally did, I hit my goal on the trade. It's kind of nice. Patience paid off yesterday. Debbie, you moved your stop too soon. I have been a victim of stop placement twice today. One time I had a good idea, it was the wrong spot. Had to take it twice, and then the other one, it was just the right trade and it got me. So it happens, right? Just one so far. Ooh, I like that. Wake up, say thank you, everything else is extra. Gosh, I love that. Guys, PMA, right? Are you guys familiar with that little acronym? PMA? PMA is positive mental attitude. I love it. I'm a huge fan because you're going to attract where you're at in your head, right? So when you are like, man, life is good. Life turns out to be good. When you make the choice to be happy, life tends to be happy. We find what we look for. When we look for winners, when we look for advantages, it's amazing. I went there once, Ron. We went to Jamaica. We stopped off, and this is a true story. I used to be bigger than I am. Pretty beefy. Novaks carry a little muscle on them. And I'm standing in this resort and I'm hanging out, and this guy comes by, and I'm about 6 feet tall. He's about 5'8". Older dude. He walks by and he thumps me on my chest. And he goes, "What's up, Rambo?" And then he just walks off. And it's been funny because my wife will walk by still to this day, 15 years later, and thump me on the chest and go, "What's up, Rambo?" And then we just giggle. So that's my Jamaica story. Uh, in Jamaica, I am known as Rambo, which is fun. Cav, I put a couple of them in the room already. If you look up top, there's a couple. I'll always share what I do, guys. No, to be honest, I wasn't a huge fan. of Jamaica, but we didn't do like the big resorts. We did the sidelines kind of things. And then Cav, there's the last one I took is a continuation style, and I got in too early. Hey, Jim, 1966. And then I took the right continuation, and it came up, and I actually added on to it, made a few hundred, and got out of that last contract break even when it didn't do what it was supposed to do. Um, I'll always share what I do. I don't mind. Guys, everything that I teach in this room is what I trade. Oh, all the traders in the class? Oh, I thought you were calling me out there. You know what? We look surprisingly similar, Cav, but we don't look identical, if that makes sense. At first glance, we look nothing alike, but once you're around us for 30 minutes, all the similarities really come through. Hey, good morning, Jose. Nice to see you. I like it when we just chit chat for a minute before class gets going, guys, right? It's a community and we're all here for the same goal. Did you really? 6 years ago. Did you meet them in Florida? I guess so. They were still in there in Florida. Right on. Um, yeah, John's a cool cat. He really is. I'm a big fan of my brother. I had no idea how smart he was when we were kids. But later in life, oh, without a doubt, he is. So my brother, my wife and I joke, my brother's a doofer. For you guys that don't know this, he's a doofer. He will do for everybody. If you need a dollar, he'll give you two. If you're hungry, he'll feed you. If you're down and out, he'll lift you up. And that's just always been his personality. And I think that's one of the reasons why he's so successful in this business is he genuinely wants you guys to be successful. He wants everybody to be successful. And it's one of the reasons that he has that happy but never satisfied. That's one of the reasons why he works so hard to give you guys the easiest, the absolute best all the time. And it's pretty cool. It's fun when you grow up and you see because when we were kids, he'd punch me in the nose and it was fun. We were siblings the way it's supposed to be, but nobody else was allowed to. He was the only one. Um, you've met him, Cav. He's a big guy. He's definitely a big dude. All right, let's get into classroom, guys. I love it. We'll chat all day and we won't do anything with indicators, and that's not what we're here for. We're here to become chart readers, to become day traders, to be successful at what we want to do. So let's get on the road to that, guys. Let's start with news. Every morning I go to forexfactory.com and I take a look to see what's going on in the world that might make um, all that might make the market go a little weird, right? Look at all these FOMC members speaking today. We've got Kashkari, Goolsby, Barr, Waller. They're talking about economic optimism. Guys, there's a lot going on in the financial world today, but none of it's really considered high impact, which means it's a bunch of people blowing smoke. And we're not too concerned about it. But these red boxes, and we don't have one till Wednesday. When Powell speaks, he's like E.F. Hutton, right? When Powell speaks, everybody listens, and it might have a huge impact on the market at 9:15 tomorrow. So every morning I'm coming to forexfactory.com and I'm looking and I want to make sure that there's nothing going on that's going to make things spike, jump, or bump. Because to be honest with you, the people that move the market are the people that are going to react to news. We don't move the market, and that's why I chose Norbert to start the day today. Because everything that I teach in this room, especially the first hour, is really the same first hour, but I'm going to try not to put it in the same order today. I want to start the day by saying, know your place in the market. You're not a big money investor if you're with me in this classroom. You are not trading thousands of contracts. You're not the one that's creating trends. You're not the one that's creating momentum, right? That's this guy. It's the big money investor. It's the men and women with enormous capital behind them. And they're going to move the market, guys. They're going to create all of these situations in the market, and we're going to be remoras. And if you're not into your marine biology, remoras swim really close to the sharks, right? The sharks don't eat them. They don't care about them. They couldn't care less about remoras. But when this guy eats a meal, these guys get fed, and that's why they hang out with the shark. And that's exactly how we approach trading the market as brand new users, guys, is we let the big money investors create momentum. We make sure that the big money investors have a clear path. And then we're going to be the small guys and we're going to find the best of the best entry area. Each of these ideas, momentum, clear path, and an entry area, are advantages that your rules provide. Um, and these three rules create, hey, good morning, Chris. These three rules create a high probability trend trade. And guys, a high probability trend trade is a trade that typically happens maybe 4 to 6 times a day, depending on the market. But it's a trade that also typically wins 70 to 80% of the time, guys. This is a trade that we're going to focus on initially because it's the easiest trade to recognize. It's only three rules providing an advantage each, creating a trade. And these three rules happen, whoops, these three rules happen on only two charts. And one of the things, if you've ever spent any time with me, simplicity is the key for me. Simplicity, I think, is the path of least resistance. The more you give yourself to think about, the less likely you are to think about the correct things. So this class is geared up to keep you focused initially on a high probability trend trade. Three rules that happen on two charts. The large chart of the sharks, guys, the large chart of the large crowd. These are the people that move the market. Your large crowd will define direction, momentum, and areas. Your first two rules, creating your first two advantages, are going to happen on the large chart. And before you ever turn your eyes to a smaller, faster chart, you will have the advantage of momentum, of a market that's likely to continue in the direction of the trend. And you're also going to have a clear path. Because one of the magical parts about Nexgen, guys, is these Fibonacci areas are where decisions are made. Right here at this red line where the market stopped and dropped, we knew about it in advance, and this is exactly where they're making decisions. These yellow one-to-ones are where the buyers decided that they're going to continue up. Coming off of the bottom, this blue Fibonacci support, next-gen users knew that it was there and knew not to try and take short entries into it. Same thing with this line. And here's the magic of it. These divergence highs, guys, this stopped the market in its tracks. What we're going to talk about in the first hour is teaching you guys how to get paid right here in between these key areas. When these key areas reverse the market, provide momentum, nothing in the way, you're going to be able to take advantage of it. But I want you to look at how many times these areas stop the market. You guys have an unbelievable advantage of knowing where these areas are. And you're going to know by the end of today's class whether they have the potential to hold or break. And what you're doing is you're identifying the areas where these guys are making their decisions, guys. And you never have to get caught up in their decision-making process. So we're going to focus on three rules. We're going to do it on two charts. We're going to define momentum, direction, and areas on a large chart. And then we're going to refine it. And we're going to bring it down to the best of the best entry point on a smaller, faster chart. And we're going to do this through the high probability trend trade. And if you go to the tutorial section from the education page and scroll on down to glossary of common terms, guys, these are fun to read anyway, just to know what's being said in the class. A high probability trade is defined as when each indicator on every chart agrees for the rules for the trade, guys. Triggers are their strongest. None of those decision-making areas are in the way. And then your entry is the absolute best with nothing between you and your targets. This is what we're going to talk about for the first hour, guys. And we're going to look at these advantages, and I hope you get excited about them because the high probability trend trade is going to turn you into a chart reader. The advantages present in this trade are going to make it so that you can read your indicators, so that you can understand where the market is likely to continue, and then use that continuation point for entries. You're also going to understand where the market is likely to go, and these are these awesome key Fibonacci areas, and you're going to be able to use momentum of the market and see them off in the distance and know that that's where the market's most likely to go. This is going to be amazing for you to collect profits. And then finally, where the market is likely to stop. And these are those areas that can create reversals. These are called termination conditions. And they have two roles in your trading. The first role is knowing where not to take that next trade. And we saw the market bounce off of these areas a lot. You're going to have this giant safety net of recognizing these areas and not trading into them, which is going to keep capital in the bank, right? And then the second half of that is these termination conditions, these likely to stop areas, when they reverse the market and set up this highest probability trend trade that we're talking about, this is where confidence comes from, because confidence comes from the memory of success. And this is a trade that typically wins 70 to 80% of the time, guys. And this is our focus for the first hour. We're going to look at this high probability trend trade. We're going to keep it simple. We're going to do it on two charts. We're going to focus on three sets of advantages. And guys, this is how you're going to become a chart reader, because 90% of your day is reading your charts and 10% will be spent looking for these entries. And I'm going to remind you guys that this is your path to success. This has been true for the last 2.5 decades, or at least since the classroom has been a thing. It's probably been 20 years. You need to post your trades in class. You need to show me what you're doing. You need to tell me what you're thinking, because the whole idea behind this classroom isn't that it's a lecture, but rather that it is interactive, that you can ask any question that's on your mind, that you can present what you're looking at on your screen. You can present your pictures. You can show me your trades. You can tell me why you did what you did, and you and I will have a one-on-one session where we're going to celebrate all of the victories, the things that you did great, but we're also going to recognize the disadvantages that may have been present, and we're going to work together each and every day to erase those disadvantages, to embrace the advantages, and to get you exactly where you told us you wanted to be as a professional day trader. So post your trades in class, guys. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. I want you to simulate. I've got some new names in here. Chariot, Big Game Biff, Jim 1966. Chris, I'm talking to you too. Guys, show me everything that you do when you simulate. Practice those trades. Practice the correct trades. And then just drop them in the room and let's have a conversation. And we're going to simplify, guys. We're going to keep it so easy today. 3 rules, 2 charts, high probability. And you're just going to keep practicing until the looks become easy. You're going to take pictures. You're going to present them. You're going to use the spreadsheet to go back and study. And that's the second half of becoming a confident trader ASAP. Nexgen gave you a spreadsheet, guys. It may be. What does your large chart look like, Chris? And have a slice of that Starbucks banana bread for me. Since I gave up gluten, that's the one thing I miss. Oh, that stuff was so good. No worries. So guys, you're going to use your spreadsheet. NextGen gave it to you. I'm going to drop a copy of mine in the room because I want to give you every advantage possible. But this spreadsheet is your trade journal. On the first page of your spreadsheet, guys, this is where every time you take a picture or every time you take a trade, this is your diary. Dear diary, today I got long in the market. I was very relaxed when I did it. It was a trend trade. I had all the advantages, and this is the one that I'm never going to miss. If you get in the habit of recording everything that you do in the spreadsheet, it creates an opportunity for growth, because every morning you're going to come back and you're going to look at this spreadsheet. You're going to study the previous day's trades and you're going to ask yourself what worked. And the things that work are you developing recognition, creating a plan for yourself. You're embracing the ideas. Oh, Chris, easy fix. Let me show you. So at the top right of your large chart, there's going to be a letter F. Click it, and it's going to bring you back to the most current bar. So what has happened is you adjusted your charts yesterday, so they look like this. Just click the F. Pow, brings it right back, brother. Easy fix. Starbucks is off the hook this time. Enjoy your coffee. Every morning. No, dude, I did it. You want to see something else, Chris? Because, and I'm going to tell you guys right now, I teach this class because I'm an absolute yahoo and I made every mistake known to man. So I would wake up, Chris, and I would have the same thing. All I would see is the red and green. I didn't know to click the F. It was right there because I was too proud to ask. I would spend mornings doing this for 10 minutes, trying to figure out where my market was. And the worst part is I had resistance, which meant that price was trading below it. And sometimes I'd go the wrong direction. Or I'd have to squish it down like this and go, oh, there it is. And then do that and pull it down. And then do that and pull it down and go, oh my gosh, where did it go? Son of a gun. When all I had to do was click the F. Dude, I'm telling you, every mistake that you can make ever, I've made. That's why I teach this class. This is one of the reasons that I love teaching this class because I want you guys to avoid all the challenges that I had. And I know the quick fixes for the silly stuff. So, guys, get in the habit of using this. What worked, what didn't, what was relaxed, what felt forced. But each and every morning, this is going to set you up for a better day because you're going to be focused on the things that were making you comfortable. There's your first one. Your second page. Good morning, Hudson. Welcome to the classroom, man. I'm Mark. I ramble for a little bit, but I want you to ask every question you have, Hudson. If you're wondering, type it in the room. Let's talk all day long, man. This class is amazing because of y'all's input. Yep, there's all my Texan just fell out. Y'all's input. Um, and if you need anything, please feel free to reach out. Guys, the second page of the spreadsheet that I gave you in the room, and by the way, you can download it, you can click and drag it over to your computer if you want. This is your personal trade setups. This is where you are going to take everything that fits your rules, that makes you happy, that's the best of the best, and you're going to put it here. And what you're doing is you're developing a trade plan. Whether it's the high probability trend trade that we're going to talk about, whether it's a medium probability trade, a momentum trade, it doesn't matter. This is how you build recognition, and repetition creates recognition. I firmly believe that, which is why I created this third page. This third page is all the cool stuff that you guys do in the room in the green section, all the pictures that you show me, all the things that are great entries using those advantages of momentum, those great likely to continue spots. And these are the client's perfect trades. These aren't necessarily yours, but if you click on them and you get in the habit of studying them, you're going to find that most of the clients embrace exactly what's taught in the room. And it goes back to the idea that when you have momentum, a clear path in an entry area, it sets you up for easy wins. It sets you up for relaxed wins. It sets you up to win more than you lose, which creates confidence through that memory of success. So that's what we're going to do today, guys. We're going to learn the trigger looks for when it's okay to trade. You're going to simulate and post pictures in the room. You're going to post pictures of your trades, pictures of your questions, pictures of your children. That's cool, whatever. And then we're going to simplify. We're going to focus on that highest probability trend trade, and we're going to become chart readers. We're going to recognize these key areas where the market is likely to continue, likely to go, and likely to stop. And then that's going to open doors for bump a da dump bump bum. I'm in such a good mood today. Um, for what we call a medium probability trade. And guys, this is the second trade. When we simplify and keep it basic, I'm going to give you a plan for this trade that gives you the highest chance of success. And a medium probability trade is defined as when most of the indicators line up, however, a small problem exists. And I will always relay back to momentum, a clear path, in an entry area. So medium probability trade means one of these is missing, and I'm going to teach you how to embrace the other two so that you can create more opportunities for yourself in the market. Your ability to read charts will identify what the small issue is, and you're going to have to manage these assertively, and your ability to read charts is going to allow you to manage them assertively. You're going to recognize trouble in your way. Your ability to read charts will do that. Do you see where I'm going with this? And it's going to let you reduce risk to a zero loss level, to take quick profits, to know when it's time to jump ship and when it's time to hold on. And all of that stems back to your ability to read charts. So let's get focused, guys. And let's look at the large chart, the chart that creates momentum. And let's learn to identify it. And it starts with knowing what the trend is. And I know I've got a lot of new names in here, so I'm gonna totally 101 this today. I'm gonna go slow. I'm gonna repeat a lot of things. I need you guys to ask for clarity if you need it. Please, please, please do me that favor. If the background on your large chart, the big chart, is green, we're in an uptrend. And if you're in an uptrend, you're only looking for rules to be met for high probability trend trades long. It doesn't mean because we're in an uptrend, we're entering the market. It means that we're looking for rules to be met for high probability trend trades long. If it's red, we're in a downtrend. We're only looking for rules to be met for high probability trend trade short. And let's see just how easy it is to put that lesson into practice. This is the NASDAQ, guys. Help me out. What direction is the NASDAQ moving right now? Are we in an uptrend or a downtrend? This is for you new people. This is the easy questions for you to get comfortable posting in the room. Green background, uptrend or downtrend, guys? Don't be shy. Shy people go hungry. Up, absolutely, Alan. See how easy that was? S&P, are we in an uptrend or a downtrend, ladies and gentlemen? What do you suppose that is with that bright green background? We're in an uptrend. Fantastic. Let's see if we can get a little. Ah, there we go. The background is red, guys. Are we looking for rules to be met for high probability trend trades long or short? What do you think? Uptrend or downtrend? I see someone type in there. Come on, give me that answer. Down. Absolutely, Chariot. You have just mastered the first lesson. You can identify the trend. And here's the deal is you can only have rule number one met, strong trigger lines on the large chart, if you're trading with the trend. See how we did that? What are strong trigger lines? It means on your large chart that the small triggers, those solid lines, I've broken above the large triggers. That's what paints the background green. And then the separation between the two, you'll notice where the smalls accelerate away from the large all the way until they return to the large. Guys, this is strong triggers. This look right here, this is the look that provides momentum. This is the best of the best. When I have strong triggers, the odds are favorable for the market to continue in the direction of the trend. So in this room, you're going to hear all the time, odds favorable momentum. You're going to see charts annotated, OFM. And guys, this is the best of the best. When I have odds favorable momentum to the upside, it looks like this. Odds favorable momentum to the downside, it looks like this. That separation, like scissors, wide open, ready to cut. When I have odds favorable momentum, it is the best of the best for me to buy a pullback to Fibonacci support in an uptrend on the smaller, faster chart, or to sell Fibonacci resistance on a pullback on that smaller, faster chart. On a large chart, on that broad stroke of the brush, it's going to look like this one bar with a tail, like it's went on a diet, super skinny. Guys, we're not trading tails because our entries don't come from the long chart. What we're going to be able to do, what you're going to be able to do, is pinpoint exactly where the bottom of that tail is likely to end. And this becomes your entry for the highest probability trend trade. And this is going to become your study tool as you go back historically and do your best to prove me wrong, which I hope that you'll do. So odds favorable momentum, most favorable look for buying support on a smaller, faster chart. Odds favorable momentum, best of the best for selling resistance on a smaller, faster chart. That's rule number 3. We're going to talk about it. But before we do, let's talk about when the advantage goes away, guys. When the small triggers work their way inside of the large triggers. This is what we call a weakening of the large triggers. And when you have weakened large triggers, anything can happen up or down. I go from odds favorable to continue in the direction of the trend to anything can happen. My scissors have closed and it becomes difficult to cut. And this rule number 1, guys, it doesn't happen all day, every day. 90% of your day is waiting for advantages, but I want you to see how powerful this is. When there's separation, the market pushes down as the triggers come into that anything can happen look. There's a reversal, right? We've lost momentum, the market goes the other way. All that momentum, there's one of those tails, one of those potential entries. Right up to anything can happen triggers, another reversal. Not coincidence, guys. Patterns repeat themselves. The reversal creates odds favorable. There's one of those tails. And then we get into one of the best things about being a rules-based trader is that if rule number 1 isn't met, you sit on your hands and do nothing, right? And if the larger down and the smaller up, I don't have the advantage of momentum because they're not wide and angled in the direction of the trend. If the background is green and the triggers are down, I don't have odds favorable momentum because they're not wide and angled in the direction of the trend. This is a transition phase, guys. This is where the buyers and sellers, this is where those sharks are fighting it out over a tuna, and you don't have to jump in the middle of them. You don't have to try to predict what the market's going to do. You can let them duke it out, and eventually someone's going to win and provide you the odds favorable momentum that you're looking for. So, rule number one says odds favorable momentum. This is crude oil, and let's just go through and take a look at crude oil without any Fibonacci, with none of those key areas. Odds favorable momentum pushes it down, and now the market is weakening. Weak triggers cause a turn. Smalls return to the large. There's your turn. Odds favorable pushes it down. Are you starting to see it here? Odds favorable. There's a tail. There's a tail. Transition. Don't get caught in it. Odds favorable. Giddy up. Odds favorable. There's a tail. Pushing down. Guys, I'm telling you, if you just scroll back, you're going to be absolutely amazed at how much momentum carries a market in the direction of the trend. And then when you put those areas back on, you're going to be absolutely amazed at how the key areas stop this thing in its tracks, sometimes even with odds favorable momentum. So small triggers inside of the large triggers. Do I have odds favorable momentum in crude oil? I know I'm in a downtrend, but do I have the momentum to support that rule number one? Guys, what do you think? New users, help me out. We're eating an elephant today. Cav says no. Chris says no. Guys, you are brilliant. How about this? NASDAQ, smalls are inside of the large. Is that my best look for going long? Not like this one is. And look, there's that tail. Giddy up. I think Safia posted that trade in class. And then we have the S&P, guys. And notice how the small are returning to the large. And there it is. No worries, Dwight. Nice to see you in here. I don't have the best of the best momentum here. I don't have that advantage of a market that's likely to continue. In fact, I have anything can happen triggers. But notice here with the separation, there's those tails, and I'll be darned, the market continues up. Guys, I'm telling you, if you allow it to be simple, it'll be simple. And the large chart leads the way. The large chart gives you momentum, and we're not even looking for the next step until it's true. Is everybody good with that? Give me a Y in the room if you're comfortable with momentum. Most of you are going to have this on the first day. You're going to feel great. You're going to feel confident. You're going to identify it. And then we have to make sure that we're not trading into an area that can stop the market, guys. These are those termination conditions. And these are the key areas where decisions are made, where the buyers buy, where the sellers sell, where profits are taken. And I'm telling you right now, guys, if you don't believe in Fibonacci right now, you will by the end of the day, because we're going to go back and look at a lot of great examples of areas that stopped and reversed the market and set us up for the best of the best, guys. And the areas that we're looking for on the large chart. It's amazing, isn't it, Chris? And oh my gosh, if you're brand new in the room, read what Chris just wrote. It's a cool feeling that he can understand this compared to last week. Guys, your first week is like drinking from a fire hose. It really is. And I'm telling you, and Chris, I told you the same thing. By about the fifth day, it all starts to click and you have this holy smokes moment. This stuff is real. Guys, we're going to look for divergence highs and divergence lows on our large chart. And what these are pivots that the redirection of price creates. So when I get a pivot and momentum doesn't follow, right? The buyers are in control and then the sellers push. If the sellers steal the momentum from the buyers, it's going to print a magenta line. And if the buyers steal the momentum from the sellers, it's going to print a cyan line. These are lines that we're going to use as potential termination conditions. We're also going to look at red Fibonacci resistance, blue Fibonacci support, and these yellow one-to-ones. And let me give you this. If you're day one, this is what you're looking at on your large chart. So there's like a little map there for you. But in order to determine a termination condition, I do that every day. Two things happen on your end. And I'm going to go to the tutorial section. I'm going to go to the tops and bottoms termination section. And I'm going to give you the recipe for when an area has the potential to stop the market. And notice that I say has the potential. I'm going to tell you right now, guys, areas break all day long. Um, and there's a recipe for that as well. But first, I want to focus on when we just put our hands in the air and say no more. When price, these dynamic Renko bars reach an area, in this case, they're reaching Fibonacci support, guys. Price is a reflection, or these Renko bars, sorry, my Snagit is slow today. These Renko bars are a reflection of price. And when price reaches an area, this is where decisions are made, guys. This is where buyers buy, sellers sell, and we don't know what's going to happen. So when price reaches the area, I want you to ask yourself, and I'm going to cover this one up. Too wordy, right? Here's your recipe. Price reaches an area. That's the first one. Where are my triggers? That's it. That's all you have to do. Price comes down and reaches Fibonacci support. Where are my triggers? They remain above support. Therefore, support is behaving as a termination condition. No more short trades into the area. How easy is that? Price reaches, no triggers, no trade. That's all you're doing. This takes away, where is it? The clear path. When termination conditions are true, you no longer have a clear path. I do not have a clear path to the bottom. And look at the bounce that comes off of support. Untradeable. Well, if I can't trade into areas, right? Price reaches, Fibonacci support, the triggers remain above, no trades. I have to wait for that area to break or for the market to reverse. Well, when is an area broken? Great question, guys. An area is broken when both the small and the large triggers get below the area in question. So up here, price reaches Fibonacci support. And Nexgen users say to themselves, you know what? I don't know if it's going to break or hold. I'm going to sit on my hands and I'm going to wait for an opportunity. Both the small triggers and the large triggers get below support. You'll notice that it begins to act as resistance. This is my clear path, guys. This is the area is broken and my path is clear. And with this clear path, notice that I have odds favorable momentum. And notice that it pulls right back to what used to be support as resistance. Guys, this becomes your entry for that high probability trend trade. This is where you guys are going to find your advantages. You're going to pinpoint that spot on a smaller, faster chart. And because of the momentum, because of the clear path, what's going to behave as a termination condition in the future is actually where the market is likely to go, and you're going to be able to collect profits down here. So simple two-part process, guys, and I want you to give me a yes if you're okay with it, because I want to start simple here. If price reaches an area and none of the triggers break, what if mid-band is a point on a half below large triggers on the 5-1? I don't even know what that means. Show me a picture, Dwight. My imagination is not that good. But what is your 5-1 chart, Dwight? What are we doing on the 5-1? You're asking if it's okay to break rule number 3, right? Am I hearing that correctly? Mark, when do I break rule number 3? We're not talking about entries? All right, show me the picture and write what you're wondering, and then I'll get you an answer for sure. Guys, price reaches resistance. Absolutely no triggers break it. No trade. There's not a clear path. Easy peasy. Both the small and the large get to the other side of resistance. Now the path is clear. Resistance becomes support. The momentum is there. There's one of those tails, guys. For the brand new user, this is it. Black and white. Price reaches. Where are my triggers? Embrace the idea that a clear path creates a huge advantage, right? And what if you insisted on a clear path? Would it make your trading more profitable? The answer is probably an overwhelming yes. But we said that areas break all the time, right? There's got to be that potential for an area to break, or we'd be caught between two lines for the whole day. So let's talk about when an area has the potential to break. The recipe is the same. Price reaches, no triggers, no trade. Small and large, clear. The area is clear. The path is clear. Let's go. And now I'm going to take this arrow because sometimes the smalls are going to get through the area, but the large are not. And guys, we call this a 50-50. And 50-50 has nothing to do with chances of winning a trade. 50-50 says my small triggers are through, my large triggers are not. If odds favorable momentum, the area has the potential to break. It's not broken. So guys, this is going to be your first medium probability trade, the 50-50 trade. If the smalls break and the large don't, this support has the potential to break because of all the momentum. But it's not broken, which means that technically it's not a clear path, which means that we're going to give you a plan to make sure that you're not forfeiting momentum, that you're not forfeiting an entry area. And then Dwight, your question is, what if the midband is a 1.5 below? So it just is. Are you asking about entries? What's the significance of the midband in this picture? Is it because you have odds favorable momentum directly into, guys, that's textbook termination. Price reaches an area, absolutely no trigger lines break through. Do you want to take a trade from it, Dwight? Is that what you're telling me? I want to make sure that I answer the question accurately. So Cav says when rules one and 2 are met. So let's do this then. And I love this. This is a great picture, isn't it? So does everybody see that we have odds favorable momentum? That's awesome, right? Rule number 1 is met. Didn't price reach Fibonacci support and not one trigger line break through it? Meaning that I have found myself at a termination condition. Guys, give me a Y in the room if you see this. This is live market going on. Price reached Fibonacci support. No trigger lines have broken through. Watch this. The Sunday school answer, Dwight, is that who cares what's going on the small chart because the large chart isn't giving you what you need to take a trade. And do you notice how it's not coming from a termination condition? All of your triggers broke through. So this isn't what we call a good top. This isn't a strong top, which means that this area is even more likely to hold. So Dwight, I think that the great lesson there, and I hope that this kind of got it, is that if the large chart isn't giving you momentum and a clear path, don't waste energy, guys. Don't waste energy looking for entries. Don't waste energy looking for something that isn't supported by the people that move the market. Does that make sense? That's exactly what we're doing right now, is we're establishing the large chart giving us momentum, and we're identifying the areas on the large chart, and we're waiting for that clear path, and then we'll look for entries. But let's talk about termination conditions a little bit more because these happen all the time. Amen, Cav. For sure, Hudson, are you ready? Let's do this. Large chart, small chart. So there's only 3 rules to the highest probability trend trade. Okay? And I'm going to tell you guys right now that the large chart is a 13-2, the small chart is a 5-1. But Hudson, I teach this classroom with the premise that you don't need to be able to build a watch to tell time, right? You just have to know what it takes to tell time. So your large chart is going to define the direction of the market. And this is where we look for trend, whether the background is green or red. Your large chart is going to define the momentum of market. This is going to let us know if the odds are favorable for it to push in the direction of that trend. And then finally, the large chart is going to define the areas. And these are those termination conditions that I've been talking about. These are those key areas, fibs, divergence highs and lows, yellow 1-to-1s, that may create a reaction or a reversal in the market. That's what the large chart does. And the large chart is literally, whoops, hold on one second. I accidentally got rid of all my pictures. The large chart is a reflection of the large crowd, the people that move the market, the institutional traders, the men and women with millions of dollars behind them that are creating the movement, that are creating the trends, that are creating the directions. So what we do, Hudson, is we understand our place in the market and we let the large crowd lead the way. We let the large crowd make sure that our first two rules are met through momentum and a clear path. And then when we have it, we're going to rely on these yahoos that definitely don't trade Nexgen. And there's a small crowd that forces a little pullback. And this is where you guys are going to find your best entries. This is where you guys are going to enter at that place where the market is likely to continue. And the two work together when the large chart says everything is going up from a termination condition. The small chart creates an opportunity for entry. And Cav, that's a little unorthodox in regards to a high probability trend trade. Um, Maybe not the best example for a new user. But Hudson, the large chart leads the way. The large chart gives us everything that we need. That's okay. It's a beautiful trade, but it's a little advanced. And then the small chart refines it down to one pinpointed spot where the market is most likely to continue. And when you look at the two together side by side, what you'll find is the large chart is a broad stroke of a brush, and we'll let it do all that defining. And what happens in this one bar on the large chart can be 15 to 30 bars on a smaller, faster chart. And this is where you will refine that broad stroke of a brush, where you will define your entry point. And that's what rule number 3 of 3 does for us, is it gets us into the market. So awesome question. Thank you. Those are the kind of questions that create clarity for you guys. And then we talked about momentum. Hopefully you were in here for that one. Momentum on the large chart is separation between the small and large. Everything is wide and up in an uptrend or in a downtrend. It's a separation between the two, like scissors waiting to cut. This gives us the advantage of momentum. And then what we've been talking about is understanding when that momentum may reach a spot to bounce. So if your price bars reach one of the key areas and the trigger lines that created momentum remain above support or, for example, below resistance, this becomes an opportunity for next-gen users to sit on their hands to recognize that the path isn't clear, that the advantage isn't there. Your trade isn't closing. Did you hit close? Or did it tap off of? So right click in your chart trader and there should be a button that says flatten everything. Or from your control center, and I don't have 8 open. If somebody wants to show him a picture of flatten all. But guys, what we're talking about is price reaches Fibonacci resistance. This is where the buyers may take profits. This is where the sellers may enter positions. This is where decisions are made. But because the trigger lines remain below, we know not to take any more long trades into that area. We're going to wait for the reaction. And the reaction is a huge push down to Fibonacci support. And when price reaches the area, you guys are saying, where are my trigger lines? Well, notice how they all remain above support. So I can't go long and I can't go short. Guys, remember 90% is reading and waiting for advantages. Price comes back up to resistance. None of the triggers are above. That's a termination. It reaches this divergence high line. None of the triggers break it. Another termination condition. And then finally, it reaches a second level of resistance. 3 in a row. We're definitely not going long here, right? But check this out. When this termination condition creates a full reversal, notice how both the large and the small are wide and there's separation between the two. Rule number 1 is met. And then we also have a market that has not reached a key Fibonacci area. Rule number 2 is met. And then there's one of those potential entries, one of those little pullbacks, hopefully to an area inside of favorable large triggers. And guys, what you do when the market is not producing advantages that 90% of the time, it's going to set you up. Doing absolutely nothing sets you up for the 10%. And guys, this high probability trend trade that happens after a termination condition, this is the one that typically runs. And this is where Nexgen users, especially new users, have the advantage to be able to capitalize on these two simple rules. And we're going to look at it one more time. And we're going to let those areas dictate, guys. Odds favorable momentum to the downside. Price reaches yellow 1-to-1s. None of the trigger lines break. Guys, absolutely no short trades. Give me a Y if you're with me. This is the most basic recipe, and I want to make sure that you understand it. When price reaches an area, the triggers don't break. Sit on your hands and do nothing because it may reverse the market, it may create a bounce, or it may just smash through. We don't have any idea. Price pushes down, hits these yellow 1-to-1s, no triggers break. You guys said, you know what? No more short trades. Let's see what happens. Whoops, that's the wrong one. And I want you to look at this reaction, and I'm going to change the arrow colors so that it doesn't get lost. We're going to go hot pink on this one. From that termination condition, the buyers push hard. Price gets above resistance, but the triggers remain below. The sellers fight back and push it right back down. The buyers take a shot, the sellers push, the buyers push again, and the sellers fight back again. Guys, this is your 90%. This is where there's no reason for you to ever get caught because your rules aren't met. But what happens is this termination condition creates a reversal. My large triggers go from red to green. And this reversal ultimately gets small and large triggers above resistance, and it behaves as support. My smalls are outside of the large. The path is clear. And guys, this is your 10% right here. You're going to be able to identify where that tail is most likely to form. You're going to enter on a smaller, faster chart. And this is going to be the one that creates confidence through the memory of success. Waiting for all the BS to sort itself out, waiting for the sharks to finish fighting, and then looking for the advantage. And guys, a termination that creates a full reversal is what we call a strong bottom. And a strong bottom is the precursor for the highest probability trend trade long. And on that same token, a strong top that sets up a rules met high probability trend trade is your best chance of success. Termination that creates a full reversal is a strong top or bottom. That strong top or bottom sets you up for the best of the best. Is everybody cool with that? Guys, this is termination conditions. And once you're good at these, it's amazing how easy things get. Because when you have momentum and there's nothing in the way, all you got to do is find an entry. But before we do that, Derek, I didn't. Can I be very open and vulnerable for a second, Derek? I have absolutely no idea what the market's going to do. None. Ever. I don't know. But here's the cool thing about what I do know, Derek, is I do know that when I have odds favorable momentum, I have a better chance of it pushing in the direction of the trend. I do know that when I have a clear path, I have a better chance of it pushing to the next area. And I do know with no uncertainty, because I've got 7,000 pictures of it, that when the first two rules are met and I get a pullback to support inside of favorable large triggers, this creates an opportunity for me through patterns that have been proven to win more than they lose. So I don't know, Derek. I don't know that it wasn't going to go back down, but let me show you, and I think that's such a great question because I want to show you something. And let's get rid of everything, right? What I do know without question is that when price reaches this area and the triggers don't break, I don't want to take a short trade. That's it. I don't know if it's going to break or hold. Don't have any idea. And then the second half of that is I know that when my smalls work their way inside of the large, I don't have the advantage of momentum. So I not only do I not know if it's going to reverse, I don't have any momentum telling me that it's likely to push one way or the other. And I don't have any idea what the market is most likely to do until I have the three advantages pieced together. So when I don't know, I just sit on my hands. And then when I see a pattern that's been proven to win more than it loses, that's when I take my trade. So embrace the idea that you have absolutely no idea what the market's going to do, right? I don't know what the S&P is going to do, but I do know without question that if it reaches Fibonacci support and none of the trigger lines break through, there is no way on God's green earth I'm going short. Does that make sense? So it eliminates the potential loser. And I also know that when the triggers are this strong and it hasn't reached that area yet, that I'm going to look to pinpoint where the market is most likely to continue. And Derek, I'm going to tell you right now, that mid band inside of favorable large triggers is exactly what I teach every morning. When the termination creates the full reversal, gives me odds favorable momentum, and price hasn't reached an area yet, I look for a pullback to an area inside of favorable large triggers. Derek, this is not a guaranteed winner, but this is a pattern that repeats itself so often that I know that it typically wins 70 to 80% of the time. And that's why we focus on the high probability trend trade first, because this is the one that gets you into the pattern that wins more than it loses. This is the one that keeps it simple on two charts. And once you embrace the idea that you don't have to know, you simply have to wait for the looks, it takes a lot of pressure, a lot of the guesswork. Guys, give me a Y if you can hear me in the room, please. Thank you, guys. So hopefully Big Game can see that. If you're ever in the room and you lose me, make sure that you tell me. And then when you see a flood of Ys come into the room, it means that it's on your end, not mine. And if you don't see any Ys, then I'll type in there that I'm probably going to reboot. Derek, I hope that helped. I hope that answered your question. I don't know. And it's funny telling people that. They're like, well, you should know, right? Shit, I don't know. I'm not in charge, man. This guy knows. But I know where he's likely to stop, and I know where he's likely to go. So, kind of cool. And we're going to come back and talk about this entry. But before we do, I want to talk about one more termination condition. Sometimes the market has a clear path, and it seems like it reverses from nowhere. Sometimes, even with odds favorable momentum, we haven't reached the area, and that market just drops down, right? Derek, this goes back to, I got no freaking idea. But I've got patterns that help me gauge it. And this is the only termination condition that I recognize on a small chart, guys. This is the only time where I'm not necessarily using lines on a large chart, but I'm using divergences on a small chart. And if you remember, divergence means loss of momentum. That's all it means. So when I get three divergences in the same price range on a small chart, this may terminate the trend. I've got three losses of momentum at the exact same price range. This might reverse things. Might, may, could, possibly. I don't know for sure. But I know that when three divergences print from a low or from a high, I'm not going short. I'm not going long because it may create a push. This becomes even more powerful. And guys, this is rule number one. When my small triggers are inside of the large triggers, that's anything can happen. Write it down. Anything can happen. I don't have an advantage with anything can happen. Anything can happen triggers and three divergences makes that termination more powerful. When that third pivot is higher than the previous, it's more powerful still. I'm going to see this look on a low, and I'm going to see this look on a high very often when my large chart appears to be reversing from nowhere. So this is the only termination condition that I am recognizing on a smaller, faster chart. And I'm going to tell you, not only will this keep you from taking that short or that long, guys, if you get into the market on that pullback at the absolute best spot, let's say we're short right here and three divergences print, Your chart reading is going to have you exiting that trade before it comes back, takes you out, and steals your profits. This is going to help eliminate hope, and it's going to become a management tool as you grow with the software. Um, so initially, whoa, that's so scary. We're going to define our areas on the large chart. If the large chart hasn't reached areas, that's the only time that we're going to use that smaller, faster chart to determine whether or not we should pump the brakes. So, guys, this is termination conditions. And when they're not present, you have a clear path, which means at this point, you have momentum because the large charts had strong triggers. You have a clear path because the large chart has absolutely nothing in the way. And now we have to refine that broad stroke of a brush. Now we have to shut down that large chart. Stop looking at that thing and let's turn our attention to the smaller, faster chart. And let's turn that one bar, the most current bar that defines all of these items, let's turn it into 15 to 30 bars, guys. Let's use a limit order. Let's wait for the market to come to us. And we are going to buy or sell a pullback. And that pullback, remember when the small crowd fights? It's that little push that goes against everything the large crowd is doing. And we're going to buy that pullback in a long, right at an area inside of favorable large triggers. Or if it's a short trade, we're going to sell that pullback at an area inside of favorable large triggers, guys. And this is rule number 3. And this is the one that gets you in at the point where the market is most likely to continue. But it's imperative that the large chart leads the way, that the large chart gives you momentum and a clear path. Because when it does, we're going to refine, guys. When the large chart says giddy up to the upside, and that's what this example is. This will be a long trade. When the large chart says odds favorable momentum to the upside, when the large chart doesn't have anything in the way to the upside, we're going to turn our attention to the smaller, faster chart. And rule number 3 says we're going to use a limit order. We're going to wait for the market to come to us, and we are going to buy or sell a pullback at an area inside of favorable large triggers. We had an outstanding conversation on favorable large triggers yesterday. And it means that your large chart or your large triggers, those dashed lines are going to flow smooth. And your synthetic triggers, which are going to be the stepped looking large triggers. These are the large triggers from the large chart. When these work together, one on top of the other, it creates what we call favorable large triggers. And favorable large triggers are where we're going to look for the area inside of those two trigger lines, one on top of the other. This creates the advantage of the smallest window of opportunity. This gives you the least amount of risk on a trade. For the brand new user, favorable large triggers is your best look for an entry because later in life, you're going to see those trigger lines not working together. They're going to be split apart, typically towards tops and bottoms. And if you get in at the area inside of one, there's no guarantees that it won't go to the other, which means that your stops have to go way below, which means you're going to really magnify your risk. So as a brand new user, embrace the idea that favorable large triggers create the least amount of risk, and the least amount of risk makes it easier to stay in the game for the average user. And as you grow with the software, you may find yourself taking those split triggers, but first, let's focus on them overlapping, one on top of the other. The areas can be inside of the large, inside of the synthetic. It can be either, which is why when they're one on top of the other, you get that smaller window of opportunity. So everything says up on the large chart. The small chart's got odds favorable momentum. I've got favorable large triggers. Hey, Geo. And now I'm looking for the areas that fall within. The areas where high probability trend trades originate, guys, can be fibs, can be yellow one-to-ones, and it can be a mid-band. What does that mean? That means that these are the areas inside of favorable large triggers that are most likely to create the bounce to continue with the trend. These are where our trades are going to originate, but we have to get the market back to them. So we let the small crowd do their thing, guys. We let the small crowd, the people that fight trend, that fight momentum, these guys are going to go, hey, you know what? We want it to go down. And you're going to see that on a smaller, faster chart with a reversal bar. At the time of the reversal bar, you are going to create your window of opportunity. You are going to identify the point where the market is most likely to continue. In a long trade, that window of opportunity is going to extend from your highest point of support to your lowest point of support. That means the area, fib midband 1 to 1, that is closest to the pivot, all the way down to the area, fibs midband yellow 1 to 1, that is furthest from the pivot inside of those favorable large triggers. This confuses people a little bit, so I want to make sure you're clear. My window of opportunity extends from this midband to these yellow 1 to 1s because this is my highest point, this is my lowest point, and they are nestled inside of favorable large triggers. Is everybody good with that? In a downtrend, reversal bar prints, the only line that I have inside of favorable large triggers is a midband. How easy is that? There is one spot where that market is likely to continue. And sure enough, that's where it continues. Guys, rule number 3 is going to get you into the market at the best of the best spot, identifying the point where it's most likely to bounce. You identify them, you create your window of opportunity, and your limit order goes right at the very top because of the momentum on the large chart, because of the clear path on the large chart. And if the market pushes back to that highest point of support, you're now in a long trade. It got quiet in here. I want to make sure you guys are with me. So large chart leads the way. Large chart gives me odds favorable momentum. Large chart gives me a clear path. Now I can look for an entry. Does that make sense? Now I can look for an entry. And my entry happens on the small chart. On the small chart, I'm going to wait for the reversal bar. At the time of the reversal bar, I'm going to create a window of opportunity. I'm going to do it by identifying the highest point of my trigger lines to the lowest point of my trigger lines, guys. And the more spread they have, that's okay, but the bigger your window becomes. But this is not the area where the market is most likely to continue. That, in this long trade, extends from the highest point of support to the lowest point of support inside of favorable large triggers. This is the most optimal spot to enter the high probability trend trade. This is where the market is most likely to continue. And because of the odds favorable momentum and the clear path, my limit order waits for the market right at that highest point of support, guys. Can you give me a why in the room if you're with me, if you're comfortable with this concept? This is what we're going to practice. We're going to go back and find this. We're going to scroll back together and look for it. And check it out, guys. Market comes down, hits your limit order. You're in a long trade. You have the advantage of momentum. You have the advantage of a clear path. You have the advantage of an entry area where the market is most likely to continue. We created a window, which means, guys, sit tight. If it drops to the bottom of the window, absolutely no worries. All of your advantages are still present. This is going to happen. It's a window. But I want you to see one of the magical things about Nexgen, guys, is if we can identify where the market is likely to continue, we also know where the market shouldn't go if that trade's going to work, right? And we're going to put a stop outside of the window of opportunity, 3 to 4 ticks beyond. And if price, for some reason, drops beyond that window of opportunity, exceeds that window, Nexgen users are going to wait for it with a protective stop. And guys, this is what we in the business call a losing trade. And here's a reality. You will take losers because anything that wins 70 to 80% of the time, do I have any mathematicians in here? Is obligated to lose 20 to 30% of the time, guys. We let the market be wrong. It's a cost of doing business. This is your rent, right? Guys, this is it. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. But you have the ability to manage your losses through this window of opportunity, through that point where it's most likely to continue. And if it hits this stop, you're done, you're out, you're waiting for the next set. But the reality is if you spend 20 days focusing on this great entry, 70 to 80% of the time, this is your result. You feel confident through that memory of success. You've given yourself an entry based on advantages. Notice that it came down deeper into the window. But once it starts to move in the direction of the trade, you're going to reduce your risk from outside of that window of opportunity, and you're going to put it above or below that reversal bar that's going in the direction of the trade. And guys, this is your highest probability trend trade. This is your first 30 days with Nexgen. And you're going to be able to go back and study this look. Here's the two charts together. When I have strong trigger lines, when I have no termination conditions, rules 1 and 2 are met. Guys, if we go back historically and circle the tail on the chart, this is not our entry because entries happen over here. But if this circle or square lines up with areas of support inside of favorable large triggers, this is your highest probability trend trade. This is your best of the best. This is the trade that creates confidence through the memory of success. Focusing on this entry is the best opportunity for you guys to get to where you want to be because these combined turn you into a chart reader. And then let's go back to the live market. Here I have odds favorable momentum. Does everybody see it? Strong triggers, smalls outside of the large. We came close to the fib, but we didn't hit it. And look what happens. It pulls back directly to support inside of favorable large triggers. Craig, I'm not sure what an underlying is. Can you help me by defining that? Oh, in this particular case, we're looking at the S&P futures. We're looking at the December contract of the S&P. You're welcome. And I just learned a new word. Thank you for that, Craig. Odds favorable, didn't reach the area. Guys, there's that pullback to support inside of favorable large triggers. And this one goes, your entry. So watch this. As the market goes up, let's get rid of the cheater circle. What do you say? The market's going up. The momentum is its strongest. Everything is working. And there's a reversal bar. And at the time of the reversal bar, I'm going to make a big old box from the top of the triggers to the bottom of the triggers. And then I'm going to refine that box from the highest point of support, which happens to be a midband, to the lowest point of support, which happens to be the exact same midband. And this becomes my bounce point. These areas inside of favorable large triggers are where the market is most likely to ricochet. I'm going to activate a limit order just above it, right at the top of that window. Guys, this becomes my entry. As the market comes down, I'm in the market right there at 77.50. My initial stop, my initial stop is going to go 3 or 4 ticks outside of that window. And that gives me right about 9 ticks of risk. Is everybody with me so far? That's okay, Hudson. This is day 1. So let's back up. Hudson, everything starts on the large chart. Let's make it easier. And let's get rid of some noise because we're only looking at entries right now. What direction is the trend, everybody? Whoops, the trend is up, yes? Green background? Awesome. The momentum is up and strong. Separation between the small and large, both are wide angled in the direction of the trend. So far, so good. That's the first 2 pieces of the puzzle. And then I'm going to look and make sure that this bar didn't reach a Fibonacci area. I'm going to make sure that it didn't hit resistance, yellow 1-to-1s, anything like that. So since it has not, my rules are met on this chart. And we'll just annotate it. Let me get my text marker. I have odds favorable momentum. I have a clear path. Now I can look at my smaller chart for entry, and let's hit apply. Okay. So here's the beginning. I have odds favorable. I have a clear path, and now I'm going to turn my attention to buy the market. Absolutely, Hudson, because we're in a long trend. So on my smaller chart, my rule says, watch this, don't need that anymore. My rule says to wait for a reversal bar. So Hudson, everything is going up, everything is going up, and then my small chart says, hey, look, we're going to give you a pushback. At the time of the reversal bar, my job is to look at the very top of my large triggers to the very bottom. Large and synthetic work together. So from the bottom of the triggers to the top of the triggers. This is the area where I'm looking from top of large synth to bottom of large and synth because they work together. I'm looking for areas inside, and I can't spell. Swear I was an English lit major. These areas can be yellow 1-to-1s, fibs, or a midband. So let's put that one on there. From the top of the large to the bottom of the large working together, I'm looking for the areas that fall within. So Hudson, the only area that I have inside of those trigger lines is a midband. Do you see it? And blue Fibonacci support is not inside of those trigger lines. Therefore, this isn't one of my areas where the market is likely to continue. The same is true as this Fibonacci support, right? As this Fibonacci support. I'm only looking for the ones that are nestled inside of those favorable large triggers. So what I'm going to do is I'm going to activate my limit order, and I'm going to try and make this as clean as I can, a tick or two above that area inside of favorable large triggers. We'll make it seashell. And this line becomes my entry. This is a limit order waiting for the pullback. This is where I'm going to enter the market because the large chart gave me odds favorable momentum, because the large chart gave me a clear path. I'm looking for this pullback to the area inside of favorable large triggers, and we're just piecing it all together. And as it pulls back, there's your entry right there, Hudson. This is where Nexgen users are going to enter the market. Because of those advantages on the large chart, this is where we're looking for the bounce. But we know that we've created a window, right? That those large triggers, those synthetics create a window. So the bottom of the large are at 76. I'm going to go about 75.25, and I'm going to put a stop down here. And this is going to be where if that market exceeds, I no longer want to be in it. With me so far? And remember that you're going to practice this and you're going to be able to go back and look at this. But we're kind of going through it bar by bar. And I know that it's a lot on day one, and I apologize. But you're new. It's okay to be new. And then look at what happens. It comes down, and it keeps coming down. But then we get a reversal bar. Notice that it never leaves those triggers. This is important, guys. Give me a Y if you see it. Price never gets below those triggers. Gives us a reversal bar. So now from 75.25, I'm going to drop that stop 2 ticks below. which means that I'm in at 77.75. My stop is at 75.75. That's 8 ticks of risk on this trade. And remember, large chart said up, large chart said clear path. This is just a little refinement process. And what happens after? Well, there's Fibonacci resistance. That looks just like the manual. My hope for you guys on day one is that you begin to recognize the correlation, that you accept that the large chart leads the way. And I want you to see where the tail, whoops. Do you notice how the tail on the large chart lines up perfectly with that window of opportunity? So we don't trade the tails, we can refine it down even more to that window of opportunity. Guys, this is your highest probability trend trade. This is your best of the best. This is what we're looking for initially to get into the market where it's most likely to continue. And let's scroll back. So we go back. This is the study, guys. Odds favorable. Everything says down. Let's see what it looked like on a smaller chart. Notice I didn't do anything on the small chart. I only circled the tail on the large. Oh, if we're a tick or two below resistance, we probably got this one. But we might not, right? Because the areas are here and it stopped kind of short. Sometimes you're not going to get an entry that fits your rules 100%. As you grow with the software, what you'll find is that you'll begin to take some shots. There's your pullback. There's your mid band at 76. The market went up to 79.50 and pushes down. Probably a management opportunity as those triggers begin to split. But do you notice again? Right back to support. And if I continue this process, guys, you've got 10 days of historical data. What am I doing? I'm creating recognition. Odds favorable momentum, clear path, pulls right back to resistance inside a favorable large trigger. So brand new users, Chariot Hudson, who else is new in here? You may not be able to see this in the moment, right? But can't you go back and study it and start to burn these pictures into your brain? Go back and circle tails. And then take the picture. Does everybody have TechSmith Capture? It downloads automatically with your software when you get it. Let me open up mine. Guys, let's take a picture together. Because this is what I want you to do for your first week. And I'm telling you right now, I'm the most patient man you're ever going to meet. You can't post too many pictures in the room as long as you do me this favor. Use your capture software, click and drag from the highest point of the left chart, the large chart, to the lowest point of the small, and release. And what this is going to do, guys, is this is going to give you a picture that embraces what's happening on the large, what's happening on the short. And I want you to use the arrow, and I want you to point, and then go to the call out and click and drag and make this little box. And in all caps, I want you to type out odds favorable momentum, because what we're doing is we're creating the recognition. This is my first advantage. Odds favorable momentum is rule number one met. And then I want you to grab an arrow again, and I want you to put it to the bottom of the bar that we're looking at, the one with the tail on it. And notice that it hasn't hit an area. And I want you to say, no term. Rule 2 met. Is everybody with me so far? This is what I want to see on your chart when you present it in the room. I want you to tell me why you're looking for the entry. And guys, this is such a key part of what you can do to build success. I want you to get in the habit for your first 20 days. I want you to write rule 3. Sell because it's a downtrend, a pullback to an area inside. Whoops. Discord just kicked me out, guys. Hold on one second. I'm on my way back, I promise. I'm speaking to you from the great beyond. Boo, 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 boo. My apologies. Here I come. There we go. Go live, back in. There we go. Guys, do you have me? Am I back? Awesome. I want you to brace the idea that if you write rule number 3 on your small chart, sell a pullback to an area inside of favorable large triggers. No worries, Chris. I got you. So guys, give me a Y in the room. This is your high probability trend trade. Odds favorable momentum, nothing in the way, pull back to an area inside of favorable large triggers. Everybody's cool with this? When you go back and study this tonight, and I hope that you do, tomorrow when you come to class, I want you to take this picture and I want you to drop it in the room, and you don't even have to ask like Chris did. I will look at your picture. The second half of this classroom revolves all about me looking at what you did. And I'm going to say, Hudson, awesome momentum, amazing, no termination. Look at the pullback to the area inside of favorable large triggers. Hudson, this is your trade, brother. This is the one that you're going to focus on the entry. And I want you to click upload, and I want you to take that screencast address and copy it, and I want you to open up your spreadsheet, and I want you to go to my favorite looks, right? As you do this historical study, and I want you to put your favorite look in here. And I want you to put, I don't know, kickassery, right? Because that's the one that I'm going to look for. This is what I'm going to build my plan around, is this look right here. Strong triggers, no terminations, area inside of favorable, guys. You can study this methodology scrolling back 10 days. Going back 10 days, right? You can see odds favorable. You can circle a tail. You can scroll back on your small chart, and you can say to yourself, dun da da da, holy crap, it worked again, right? And you can say to yourself, egads and little fishes, it just keeps happening. I need to commit this look to memory. I need to recognize with odds favorable. Look at the pullback to support, guys. And it waffles, but the large chart never said that we were done. And this is without the benefit of Fibonacci. And then you start adding in those key areas, and what you find is that not every trade becomes a trade, but this is how you can identify the first entries. And then when the fibs come up, you can say to yourself, oh, that's exactly what created the indecision, were those yellow one-to-ones. That's what reversed the market down here, was that blue Fibonacci support. Blue Fibonacci support, red Fibonacci resistance. Over and over, guys. So there's your first hour. I went hour and a half because I have a lot of new people in here. But this is where I'm going to encourage you guys. Let me know if you're comfortable on a basic level that 3 advantages create the high probability trend trade. And these 3 advantages are your Bible for the first 20 days. And 2 charts give you all the information that you could ever hope for. And these 2 charts are all you need for the first 30 days. And learning the software is a process, guys. You can all identify trend, and then to trend, you're going to add odds favorable momentum. And to the odds favorable momentum, you will recognize a clear path. And when these first 3 things happen on a large chart, you're going to learn to refine it to an area inside of favorable large triggers. Guys, this is Nexgen. This is what we do. This is the same thing that we've done for 25 years. And if you keep it simple, your chances of success go up exponentially. So I'm going to give you, I'm dropping it in the chat box right now, guys. Download it, drag it over to your computer. This is your high probability trend trade checklist, guys. Print this out, put it on your desktop, police yourself. Make sure that you're trading the right rules. This is also what I expect you to write on every chart, guys. I'll work my ass off for you every day, but you got to do a little work too. You got to tell me why you did what you did. I've never had anybody in the history of this checklist do worse than 70% winners by following it to the letter. And because some of us are visual learners, I'm giving you the exact same checklist, but I've stolen pictures, liberated, if you will, from the user guide. What's the termination condition that creates a full reversal look like? Looks just like that. That's a strong bottom. Here's your momentum. Here's your momentum. There's that crappy little look that steals money. Money taker, money maker, right? Here's that window of opportunity. Oh, no worry. Chris, let me know when you get back. And if you have to split before class is over, this is for everybody. If you post a picture and you need feedback before you have to run off to your other job, go, dude, Mark, I need feedback, please. I have to head out in 10 minutes and I'll get you. So, Chris, let me know if you got to split early. I'll make sure you get that feedback before you go. But guys, that's your checklist with the pictures. That's your checklist without the pictures. And now I'm going to give you a plan. I'm going to give you something to follow as a brand new user. Disclaimer, I had to put this in there because people tended to get really upset when other people took trades outside of the high probability trend trade in the room. Guys, this is your stepping stone. This is a stepping stone on your learning journey. What I talk about in the first hour is not where your education ends, guys. You're going to become amazing and brilliant more and more as time progresses. But this is going to optimize your chances of success with that high probability trend trade. It's going to optimize your chances of success with that medium probability 50-50 look. Remember when areas have the potential to break. Give me just 1 second, Hudson, and I'll answer that because I feel like you're looking at the smaller, faster chart, yes? Looking at the 5-1, the smaller, faster chart for that third moving average? Let me know, and then it'll be an easy clarification. I just want to make sure I'm giving you the right one. Are you with me? This one has 2, small and large. This one has 3, small, large, and large. That's what you're looking at? Awesome. Check it out, Hudson. The lighter colored, the one that is stepped, is nothing more than the large trigger from your large chart. Because when the large trigger from the small chart and the large trigger from the large chart overlap and come together, it creates the best window of opportunity, the most likely point for a bounce. Does that make sense? Great question, man. Keep them coming. And then, guys, this is your plan as a new user. And as you simulate, as you participate in class, as you go back and study, circle those tails and look at them, and you practice, you will craft a plan that's tailored to your needs, guys. You're gonna find trades that are comfortable to you. You're gonna find trades that are not. But I'm gonna tell you right now, as you go outside of this best of the best, you've got to do the study. You've got to find 100 examples of what's getting you in the market and make sure that it wins more than it loses. This one revolves around that exactly. Statistical advantages each and every time. And Chris, what I said, I think you had already split. If you have to go to work or something ever, anybody in the room, and you need feedback before you split, just make sure you let me know. Hey, I got to go to work, Mark. Can we look at my chart? And I will always say yes. I promise. But you're going to create a plan for you, guys, based on your ability to read the charts. And your simple plan for consistency is this KISS plan. And look what it starts with. Never fight the large chart direction. Never fight the large chart triggers. This is 60%, give or take, of the mistakes that new users make. So we're going to take 20 days. Some of you, it may take 3. Some of you, it may take 33. It doesn't matter. It's a marathon, not a sprint. But you're going to define your entry. And this is key, guys. You are defining your entry. That's it. Where am I going to get into the market? That's that checklist. When the checklist is met, you pull the trigger. When it's not, you sit on your hands. That's it. It's that easy. Either your rules are met or they're not. But here's the deal is once you get into the market, that's the first step. That's the first bite of the elephant that we're eating, guys. You're going to have to manage it. Eventually, you're going to have a management plan as well. So I give you one that is crazy simple, pragmatic, emotionless. Guys, there's no opinion involved. It's nothing more than a series of if-thens that if you practice them a couple times, whether it's live or historical, it begins to make sense. And it all begins 100%, guys, with getting in at the best spot, getting in at the area inside of favorable large triggers, making sure that you have the best of the best. Your initial stop goes where the market shouldn't. And at this point, there's nothing for you guys to do. It's either going to stop you out, normal part of a positive equity curve, or it's going to give you the reversal bar. And if it does, you're going to reduce your risk just like we did as a classroom. Couple ticks above it. So now we've managed our risk before we manage our profits. At this point, you're either going to get stopped out, smaller loss, no harm done, or it's going to hit your first target. Your first target is only $100, guys, and this is designed to get those endorphins kicking. You're excited, you're happy, you got paid. They can't take that from you. You feel amazing. You just high-fived your wife, pet the dog, yodeled a little bit, and you moved your stop to break even, so you have no risk and money in your pocket, guys. And this is designed. That silly stop that makes absolutely no sense because it's so close to everything going on is designed to build trust that the large chart leads the way. It's designed to build trust that the large chart gave you momentum, that the large chart gave you direction, the large chart defines your areas, and it makes it easier for you guys to hold for the second target. And the second target's only $200 in the distance, which means in a $200 move on two contracts, you guys just made $300. $300 you can build a life around. You can build a career around. That's $1,500 a week, guys. That's $6,000 a month. That is $72,000 a year trading two contracts in the highest probability, most pragmatic approach that you could ever take. This doesn't include 50-50 trades. This is one stinking trade that wins typically 70 to 80% of the time. And what happens when that two lot becomes a four lot, guys? 144,000, and keep that compounding going. You don't need all of the trades. You need the best trades, and you need those best trades over and over. And Pedro, I apologize. We were talking about entries and I missed your question. Where is the optimal entry when the triggers are inside of the bars? Where is my best entry when I don't have momentum, Pedro? Is that what you're asking me? Mark, where's the best place to break my rules when I don't have odds favorable momentum? Where's my window of opportunity when there is no window of opportunity? Pedro, are you with me in here? This is one of the most common questions I ever get. Mark, how do I take a trade if there isn't momentum? Mark, how do I define where the market is most likely to continue if I don't have areas inside of favorable large triggers? Pedro, if you don't have momentum and you don't have an area inside of favorable large triggers, mm, you have a trending market, right? And guys, I'll never argue with you. If this is your momentum look, outstanding. What does your small chart say about that momentum look? To me, it says it's garbage. I have weak triggers and divergence. The problem with this, Pedro, is you're right at areas. You're right at decision making. Your small chart is starting to show change. Your large chart doesn't have separation, and you don't have any areas inside of favorable large triggers. It becomes kind of a guess at this point. So let me show you, because I don't want to say there's not an entry. Let me show you a cool thing that you can do, Pedro. It takes a little bit of patience. Where is it at? Here we go. Let's say things aren't perfect, right? It's not the best look. One of the things some users do, Pedro, is they simply wait for every trigger line to get the same color, for the small to roll, and then when they roll, a little snapback right in an area gives you a better shot at success without having to guess which potential area is going to hold. So I don't know if it's going to be this fib, this fib, this fib, or this fib. So if I let my small triggers roll, and let's go see, what time was that? Let's go see if the NASDAQ gave us that opportunity. So this, was that yesterday, Pedro, or was that today? Help me out. What time was that? I don't have timestamps. Oh, no wonder that's crude. Here we go. So, which one of these was it? Was it this one? Around 10:30. Cool. So that's it. So here, okay. I love this. This is an awesome question, by the way. Is it going to be that support? Is it going to be this one-to-one? Or is it going to be this area of support, right? And you're just not sure. Does that make sense so far? So now we have to kind of say, well, let me get some sort of confirmation. And you're trading the NASDAQ here, which is a totally different beast. What can we do to give ourselves a fighting chance? Well, you can wait for a reversal bar, but the reversal bar still fights these strong triggers. You can wait for a close on the correct side of the small triggers, or see how your small triggers roll and you get that little snapback and it heads back up. This is a good look too, because at least here, now every trigger line is going the same direction. Does that make sense, Pedro? Awesome. So that's what I do when I have these moments of indecision, when I'm not exactly sure where it might happen, I can use some sort of confirmation, whether it is, and it did, but it retested this one, and this one. So the reversal bar is coming off of the final retest, the lowest retest, right? So if you get in at 38, you're feeling pretty good. It goes all the way up to 46, capture your $100, and then it pulls back again right to the mid band. Everything's going up. So it's a great question, Pedro. And as you grow with the software, and I know that you've been at this a little bit longer, it gives you opportunities, right? It gives you opportunities to catch some stuff that are outside of the high probability trend trade. But especially on the NASDAQ, for me, that little bit of confirmation goes a long way when the areas start to fall out. Great question, man. I hope that was a good answer for you. I do not. All right, let's take a look. So not a strong bottom, Chris, because it's not a termination that creates the full reversal. So let's start there. If this had come from a fib, it's a strong bottom, but I like it. The triggers roll. The smalls get above the large, right? And what you're taking here is a momentum style trade. You're hoping that momentum breaks these areas. Ignore this. You were trying to fix your frozen program. Weak tops happen on the large chart. Chris, can I do a very basic read on your charts? So I define a strong top or bottom. Whoops. Strong top or bottom defined only on a large chart. And the recipe is a termination that creates a full reversal. Does that make sense? So let's start there. A strong top or bottom is a termination that creates a full reversal. That's the only way that I can have a strong top or bottom. Let me show you a picture. Yeah, I've got pictures for everything. When it hits an area and everything reverses, that's a strong top. When it hits an area, everything reverses, that's a strong bottom. If it turns not from an area, even with divergence, it's not a strong top or bottom. And what happens is when it's not a strong top or bottom, you have less chance of these areas breaking. Not a strong bottom, and the areas ultimately hold up here. So that's the first thing, is strong top or bottom. And then, and this is only looking at the large chart. So this is all that I'm looking for right now. That's the first thing that I look for. That's the first check on the checklist. And then I'm looking for, whoops, odds favorable momentum, right? We're looking for that OFM. Great job. Small's above the large are starting to turn. You're right at the beginning of odds favorable momentum. Does that make sense? Cool. And then, Chris, where you entered the market, give me a Y if you see it. Price reached resistance. All of the trigger lines are below resistance. This is not an area to trade into. This is an area that has the potential to give a bounce, to continue that market down. This is 100% termination condition. So for the high probability trend trade, Chris, this is very risky. That's okay. But I love to celebrate victories too. What you took with this momentum was a momentum style entry. You let the market test it, bounce, and all of that momentum continues up. This is a trade that you're going to start catching later in life, and you're going to dig it because there's a lot of opportunity there. So you're actually better than you knew already. This is a momentum style, and right now Safia is looking at your trade going, hell yeah, Chris, that's the one I get paid on every day. Um, Little different set of rules than high probability. And then your exit is brilliant. Fibonacci resistance, get out of that trade, get paid. You were gonna get out there, but the triggers were wide. You let momentum keep you in the trade. No divergence, pull back to those one-to-ones. Chris, it is a brilliant trade. Brilliant trade that you stumbled into. But now you know. Momentum, remember when I said momentum fixes mistakes? I wasn't kidding. Great job, dude. Not a high probability trend trade, but an absolutely beautiful trade. And let's see. No, I was going to see if Safia had one there, but she didn't. That's okay. We'll go back and look at Safia's in a minute. But guys, this is our first hour. It turned into 2 hours. Um, does anyone speak Portuguese? Hudson's asking. That'd be cool if you did. That'd be awesome. Normally, this first hour takes an hour, guys. Today it took an hour 45 because I know I have a lot of new people in here. And I know that on day one, guys, it's a lot of information. It really is. So much so that this is my first thing that comes up. This is all of us on day one, guys. So for you guys that are like, holy crap, what did I get myself into? This is totally normal. This is where we start. This is where we all start. It's a flood of information. It's coming out of your nose, your ears. It's probably pushing all the way down to the backside. This goes away on about day three. It could be. This goes away on about day three. And it goes away faster if you allow it to be simple. If you allow yourself to only focus on the best of the best, um, it goes away faster. That overwhelming sensation goes away faster. If you go back and study these tales, right? If you go back and study when everything is down, the market tends to continue down. When everything is up, the market tends to continue up. You now have a methodology. You have a trading plan in this super simple plan to keep you focused on getting the best of the best, to keep you focused on success. And then when you get to that consistency point, it's amazing. It's not like it used to be. There's funding firms out there now that will literally pay you to trade their money. If you take your basics and you go through, this is one called Apex, guys. And for like $35 a month, you can control $50,000 of their money, but you have to pass a test first. You have to be consistent, not blow out accounts. But the days of needing 10 grand to be a day trader are over. For literally 35 bucks a month, you can control 50,000. And if you get to 3 grand before you blow their account out, and you're going to blow a few out because you're going to get emotional. Guys, they're going to give you their money to trade. They're going to let you keep the first 25 grand, 90% after that. And this is an amazing opportunity for you guys. And I'm going to tell you right now, I've had people get funded within their first 30 days with Nexgen by keeping it simple. And I've also had people blow those accounts out of the freaking water by deviating from simple. Focus on the best. Focus on the best for a while. Get good at one thing before you try to add more. Get good at the best looks before you try to add the iffy looks. And everybody was there, Safia. I was there 3 years ago. And I'll tell you, Pedro, I say no. But you're trading the NASDAQ, right? On any other market, I say absolutely not. On the NASDAQ, I say watch them for a bounce and make sure that everything's perfect if you're trading into them. Because the NASDAQ trades differently, guys. The NASDAQ trades different than crude oil. It trades different than the S&P. You have to not only be 100% comfortable and confident with your large chart reads, there's different entries for the NASDAQ. Pedro, I don't know if you've ever been in my class when we talk about it, but I've got a section on my spreadsheet about finding entries on the NASDAQ, and if you want to talk about it, I'd love to. So, good stuff. So remember, okay, Chris, let's go to it real quick. Oh, let me find your picture again. Sorry, I accidentally closed it out. I think I accidentally canceled out the internet. My bad. Um, Here's your blue line over here. See how it stopped printing right at 10 a.m.? Every 2 hours, your software updates the fib. So every 2 hours, your software runs those thousands upon thousands of calculations to make sure that in the moment you've got the best of the best. So if it stops printing, it's in the rearview mirror. But I see exactly what you were thinking, and it's not completely uncommon that it happened. Nope, they're just recalculating. That's all it is. And when it's gone, we don't worry about it, but it still created a bounce, didn't it? Whoever made that fib happen, they still knew about it. So great stuff. Guys, that's the longest first hour I think I have ever had. Price reach support, the large never break, right? Price reach divergence, the large never break. Price reaches support, the large never break. And now I've got all these divergences going on. Is the market going to go up or down? This goes back to what I told Derek earlier. I have absolutely no idea. Everything says down, but I can't go short into support. Nothing says up, and I can't go long off the termination. I'm going to sit on my hands and wait and see what happens. And the NASDAQ, egads, that's an awful lot to giddy up. They're pushing it up on the NASDAQ, and the S&P appears to be following suit. So, hey, Chris, have a good one, man. Thank you for being here. Yeah, Pedro, I hit my goal this morning before I ever came to class. It's been a good day on the NASDAQ. When everything says up, just keep going up till it stops working, right? Awesome. Guys, I'm going to take a few minutes. Thank you so much for being so interactive in this first hour, for participating. I'm going to take a quick break. And then what I'm going to do is I'm going to come back and I'm going to start looking at all the charts that you guys have posted. We're going to talk about them. And when I talk about charts, guys, I don't care if it's a high probability trend trade or not. But I'm going to go back to momentum, clear path, and entry areas so that we can reinforce the great rules for each and every one of you that's brand new. And then we'll talk about how the trade had such a great shot or didn't. I don't judge you on what your trades look like, but I use the trades as advantages to teach this classroom. So even if I look at Safia's trade or Paul's trade or Ron's trade, and it's not a high probability trend trade, I'll still talk about all the reasons that it was an awesome trade. And I can tell you that the people that are taking trades outside of what we teach on the basics are the people that have done the study, the people that have spent the time to create a plan that works for them. So I'll be back in 5 minutes, guys. Stand up, stretch your legs. All right, guys. I can't believe we're already in the third hour. That's awesome. I'm gonna, just so you can see it, I'm gonna scroll to the top of the box here, and we're gonna start looking at your pictures, guys, and we're gonna talk about how they relate to those advantages. And I want to remind you that all we've done today is laid a foundation. All we're doing today is we're laying this foundation for you to become a chart reader so that you can branch out. If you are excited about my brother's seminars, I don't know if you've seen those yet. So my brother wrote the software. My brother created these rules that I teach. My brother has done all of this. And he's got 27 years with Fibonacci, with reading the indicators, with reading the charts. And he's offering private tutorials. He's getting himself into a position where you guys can come in and spend time with him in small sessions during a week. I'm laying the foundation for it, guys. I'm laying the foundation for you guys to be able to get in and be successful with what he's doing. Um, so, how awesome that you guys have these advantages, these opportunities. I'm excited for you and for this program that he's running because this is the stuff that you end up doing when you spend a little time with him. Sophia, beautiful. Termination creates odds favorable. Look at that perfect entry. Beautiful. And bingo. I need that bingo stamp. That's awesome. Guys, look at this. Odds favorable. Everything says up. She takes the pullback to support, and that thing flies off. What an outstanding trade, Sophia. Beautiful. Debbie, everything says up. Odds favorable. You take the pullback. Oh, and you chum the waters. Debbie said that she moved her stop too soon. I agree 100%. You had it right at support inside of favorable large triggers. But beautiful trade. Termination. Everything says up. Odds favorable. Perfect entry. And it did exactly what it said it was going to do. You just got caught with a little bit of stop placement. It happens sometimes. Back to Sophia. Everything says up. You let it do what it's doing a little bit. Hop in and take it off. Pedro, this is a great look. When everything says up but it isn't perfect and you're not sure where it's going to go, notice how she waits for the small triggers to go up too and just takes that run. Little conservative. She knows where her risk is at. Sophia, beautiful trade. And it's the Sophia and Debbie show right now. Everything says up. Way to keep your head in the game. Pull back to support inside of favorable large triggers and off to the races. Debbie, beautiful trading. No, I love the sticker. I think it's rad. Shogun, the one he did Friday, helped a lot. I think that's great. Guys, nobody reads charts like my brother. Nobody, I don't read charts like my brother. I'm like, what? How did you do that? And it's just because he has repetition. That's it. Um, but I can tell you right now, everything that he talks about is the same advantages that I talk about. He just refines it to little different looks. All right. So the Safia Debbie show, let's see if any guys are trading today or if it's all these wonderful women of Nexgen. Where am I? I lost my spot. Hold on just one second. Here we go. Coming through. Gary, finally. Gary says, you know what? When everything says down off of a termination condition, I'm going short at that area by the triggers. Beautiful trade, Gary. Everything says down, there's momentum, it comes from a termination condition, and I'll be damned, everything goes down right to Fibonacci support. Gary knew where to take profits. And Safia is competitive. She says, I can do it too. Momentum trade. Odds favorable, smashing through, pulls right back to resistance at those triggers, and just rocks it down to Fibonacci support. Outstanding, Safia. And then Dwight, we talked about this one, right? Termination conditions, say sit on your hands, wait a minute. And then Safia, Gary's killing it today. Once again, This is a lot like the one that Chris caught, and I like it. It's not a good bottom. You identified it. It is momentum. It's directly into potential termination conditions, but you let it test, break the area, and pull back. You're using momentum to get to the next area. This is wonderful. Hey, congratulations, Safia. Right? This is that one where you start, when I go, oh, Safia, it's into a termination condition. And everyone's like, Safia traded into a termination condition. Guys, Safia had kick-ass momentum. She let the small chart break, and then she took her opportunity. It's beautiful, and you wrote it out. I know what you're doing. This one gives me heartburn, but the way you take it is brilliant. Nice job. Guys, I'm not going to use the skin a cat, but there is an infinite amount of ways for you guys to take advantage of the software, to be able to recognize advantages, to get into it, and to trade what's comfortable to you. So focus on your trades. Focus on building that foundation. This is Paul. Good top. 50-50 trade. Smalls below, large above. Perfect entry. Out at trouble. Outstanding. And then Paul, if I'm not mistaken, nope, that was 945. I took a very similar trade in crude. Looked almost exactly the same this morning. And then Paul says, you know what? The look's so nice, let's make it twice. Gets in, gets out, gets paid, gets in, gets out. Looking to get paid on the way down. Heads up trading, Paul. Nice job, dude. And the cool thing is, guys, large chart leads the way. Termination creates odds favorable momentum. Areas with the potential to break, Paul trades off of them. That's it. Incredible. Didn't make as much as you could have? Oh. In at 70, out at 68.50. That's $150. So that's $300. In again, out. That's about 400 that you're showing me right there, Paul. Sucks to be you, my friend. I don't know how I could live with myself making $400 in 6 minutes trading advantages. Slacker. Please note all the sarcasm. 360 in 5 minutes. Congratulations, Paul. You're a high-priced lawyer. You are Johnny freaking Cochran. Nice job. Isn't it funny, though? Perspective. Paul's bummed about the 360 because he knew that there was 1,000 for him. And he'll get it. The goal's to get paid, guys, and it doesn't have to happen all at once. Gary took longs till they stopped working. And then you tried to go short, but you forgot to wait for the pullback. I don't know where. Okay, there's your pivot with divergence. There's your retest, small triggers down. Getting in early kind of jacked you up, and then you momentum, and that's the one that works. Just gotta remove a little bit of the silly as you wait for the transition. Um, and I think that's one of the biggest things, guys, is just being a little bit patient. Gary, your read was good, right? You just lost a little bit of patience there. And then Pedro, this one kind of goes back. That's the same trigger look that you had. Whoops. Sorry. Looks familiar, right, Pedro? That's the same one that we had earlier. Are you still in here? I don't know if you're still in here. But I like that these things repeat themselves. And as it pulls back, you don't get any sort of confirmation until the reversal bar. Your risk is already established, and then at that point, the market tells you that we're not going up. Kind of cool. Same concept. Gary took it from the bottom end of it, and then when it doesn't happen, Gary, those one-to-ones become your potential entry right there. And I know that a little bit of indecision there and nice recovery to catch it all the way down. Solid trading, Gary. Great job today, man. Let's see where we're at. I love it when you guys post like this. Let me see. Let me see. That was Gary coming through. Oop, that was me. And then we got Geo in here. Geo already split for the day. But guys, Geo's been with us for a while. Geo knows that when a termination from a bad bottom, guys, this is one of those common patterns. When we don't get that termination condition from an area, it's likely to push up, retest resistance, and a lot of times it'll finish down. And Geo knew that. And notice that it comes into that divergence low, bounces right off of those one-to-ones right here, and then when every trigger agrees. So Pedro, another good one here. When all the triggers agree in the same direction, he takes advantage to get down to that next one. And I think that that agreement in times of indecision pays huge dividends. If it's not perfect and you're like, man, it says it's going up or it says it's going down, um, being able to say, I'll just wait till everything's the same color, right? Paul says termination condition, not doing it. Paul, great patience, following rule number 2. No reason to trade into an area likely to stop the market. Outstanding. You guys are killing it today. Oh, Gary, we saw that one. Sophia, everything says down, strong triggers. There's that breakthrough pullback. Beautiful. And then you get out with divergent. Sophia, amazing. I get so proud when I watch you guys create these things. Dwight, odds favorable, cranking up. Momentum gets you in. You don't know if that's going to break or not. So you say, let me just get paid at it. Great job, dude. Gino. Let me blow this up. Testing my old eyes, Gino. You take a momentum style. Everything is cranking to the upside. You get in, and you get out right by the termination. You get out at 43.85. You get in at 43.83. Why is just a tiny little chomp on it, huh, Gino? And then Gary, right into terminations. You try to short when everything's set up. It looks like no. You took the long. Tried to be first trading into the termination without momentum and got break even. That's what I like to see. Gary, I'm telling you, that's the one that I like to see. You recognize the challenges. You took a shot at it. You weren't willing to give it all up. Nice job. Guys, I'm telling you, the better you are at reading charts, the more opportunities are out there. They're not all clear path and momentum. Sometimes they're momentum without the clear path, but you can manage aggressively and take that shot. Where am I? That's not where I am, but we'll look at it. Gary again. All the momentum, smalls broke through. Let's take a pullback and get up to the trouble spot. Nice job. Seems like a common theme, Gary. All your charts agree, and you're going. All right, Paul. Termination creates a full reversal. Full reversal gives odds favorable. Odds favorable has no divergence. You take a shot at the 50-50 trade, at the area with the potential to break. Does everyone understand that? Paul took a shot at an area with the potential to break. This is one of those 50-50 trades. Guys, give me a Y in the room if you're kind of new. The small triggers broke through with odds favorable, but the large triggers did not. Is everybody comfortable with that? That's a 50-50 look. And what it means is that the area has the potential to break with all of that momentum, but it's really not guaranteed. One of the biggest challenges that I see sometimes is this area is not broken. These one-to-ones haven't broken. That blue fib behind it hasn't broken. So we're actually not trading into one area that we hope breaks. We're trading into four areas that we hope breaks. Guys, you're putting a lot of pressure on that market to get an awful lot done. That's a lot of points where decisions might be made. And the momentum carries it up for sure. And Paul took the best shot at it, but that's four areas that weren't broken that he's hoping breaks. I'm not a huge fan of trying to break 4 or 5 different areas. I love one area, maybe two, depending on whether it's coming from a good top or bottom. So I feel like there's some advantages there. Salvia area breaks, you let everything roll and you get in and you get out right at the entry for continuation up. Nice job, Salvia. And then Cav, that's that momentum style, right? Everything says up, you let it break and snap back to the fib. Momentum, momentum. Cav, strong work. Ron says, if Cav can do it, I can do it. Odds favorable, clear path, get in, get out of trouble. Man, you guys are good at this. One of the things I'd love, what does that mean? When should we take? Little sideways. When should you take what, Safia? A break? I don't know, probably. That one? Ron's? I don't know which one you're talking about, Safia. So you're asking me, when you have absolutely no idea whether it's going to hold or break and there's so many areas, how do I take it? I'll show you exactly how you take that trade. If you're going to take it, with all the momentum, you take it at the highest point of support inside of favorable large triggers and you exit if it goes beyond it. But you realize that it's not a high probability trade, right? This isn't your best of the best. This isn't your highest chance of success, and you have to be okay losing a couple of these. But Paul took it perfect. Beautiful. It just didn't work. But sometimes what I'll do is I'll say, man, this is the best of the best, guys. And when I talk about the KISS plan, when I talk about those advantages and using the most simple approach, Paul nailed it to the letter. But it still doesn't guarantee a win, right? So I try to pick it apart. Was there something? Maybe. Well, there's 4 areas that didn't break. Maybe that's a lot of work, but he still took it perfect, 100%. But the one thing I put on the KISS plan is one area not broken. Awesome. Great question, Safia. Sometimes the answer is don't take an entry, right? Sometimes the answer is there's just not one. I think Paul took it perfect. It just didn't work. And then when the 50-50 doesn't work and they push down, notice how they come back and they retest the area. Look at his trigger lines now. Look at them coming into the area as they try to break it. Look at them as they retest the area that didn't break. Paul says, get everything going the right direction. I am going short. Nice job, Paul. I hope that dropped like a Led Zeppelin for you. That's that patience piece. Yep. And then who was this? Sorry, I clicked on it and then I missed it. This is Paul again. Everything says up, the path is clear, but the triggers aren't the best. Divergence prints, but Paul knows if the market's going to continue, that's where it's going to continue from. I'm willing to take. Oh, he even wrote that. If it goes, this is the spot. Virtually no risk. If he gets stopped out, who cares? Right? Paul's like, whatever. I'm not worried about it. I'm willing to take a shot at this one. I love after pictures though. And then Pedro, what about no resistance or one-to-ones to use for target entry? Can we put an entry? Pedro, you can do whatever you want, brother. Can't stress that enough. You can do whatever you want. That's it. So if there's no areas, and these are different. Nice exit, by the way. But these are different, right? Because here your synthetics are up, here your large triggers are down. Here, nothing's even rolled. Here, we've gotten a full reversal off the termination condition. See how the two charts don't quite line up? Let's go see if we can find it. 395. Let's go to the NASDAQ real quick. And guys, I love going back to examples like this. You had a fib that I didn't. I may need to rebuild. So let me show you my thoughts on this. And you had a fib here. Pedro, are you with me? Cool. So this was resistance. I don't have it. I may need to rebuild. I changed my chart so much. So let me put the fib in for you. And I love the recognition. You're saying, man, everything is coming down. I'm coming off of a fib. It's a great termination, but I don't have any areas, right? I don't have any areas to really trade off of. So what happens, Pedro, is for me, the market's coming down and you're waiting and you don't even really start to get the reversal. Let me double check your picture to see where it was at. So you're at the mid band. So we're right here and you're thinking short trade. I dig it. That's the right thought off of this. The challenge is where's it going to come from? Hell, I have no idea. So let's go back to that little confirmation piece, right? I know that I want to go short, but I know that it's probably going to retrace to go somewhere, right? And I don't know exactly where. A pretty likely spot is close the gap to those large triggers, and that's exactly what it does. It pulls back right to the small, right to the large. Notice the reversal bar, Pedro? There's that little confirmation again that might help you so you don't jump in, right? Trying to figure it out. And then once you get in here and the market pushes down, divergence may be an exit condition. And then notice the split triggers. So you're thinking one-to-ones, but you're just not sure. And your small triggers are up strong, like they're pushing. So once again, you're saying, well, it's starting back up, but my large triggers are a full bar away. And I'm just talking through everything that I see. And if I need to clarify, let me know, please. Are you comfortable with the gap theory, Pedro? Because this didn't hit an area, but do you see how far away the large triggers are? What you find a lot, and this is a pattern that creates, well, in an uptrend like this, it's hard, but let's go back. Price pulls down. If the large triggers remain a full bar away, it loves to close the gap. I know that you're with me. I want to show this to the other people too. Price goes down, hits an area, large triggers a full bar away, it typically closes the gap. So you can use that same idea here, Pedro, where you're like, all right, I'm a full bar away, but it's starting to push back up. Where is it going to make contact with the triggers? Well, it's going to make contact with those synthetics right here. Can I wait for confirmation? Can I wait for that reversal bar once again? to see if it's going to go down. And of course, this one has some indecision, right? But now the momentum is getting better, but we still have these split triggers. They're trying to figure it out. There's this huge fight. Um, and I think that this is where having a little confirmation with a reversal bar, when you're not giving yourself the advantage of areas, pays dividends. Does that make sense? So it's not really high probability anymore because you're not trading from an area. And since you don't have that bounce point, that little bit of confirmation helps you, I think. And there's a cost for waiting for confirmation. You're not in at the spot, but since you can't really identify a spot, at least that way you're not just jumping in, right? Because it would be easy to jump in here, to jump in here, to jump in here, to jump in here, right? It would be easy to fight those small triggers or just wait for a reversal bar up there at the synthetics. And it's that patient piece a little bit. Um, Great question, man. Synthetics are up, synthetics are up, synthetics are flat, synthetics are flat, synthetics are down, synthetics are down. They're still synthetics, different time frames dealing with bar structures. So I mean, they're not going to be mirrored 100%, right? But when these are flat, that's transition. That's what you're looking at right there. That's where they rolled on the small chart. It's a bar off. I mean, that's about as close as you can get, right? But those are your transitions, and they're pretty darn close. But it is two different time frames, right? We're dealing with different bar structures. We're dealing with different speeds. So there's got to be some sort of little lapse there. Yeah. And now here we go again. Where am I getting in? If you're looking for the short with it, well, I don't have any areas. Can we wait for the confirmation? Can we wait for a reversal bar? And maybe if we get a reversal bar, then I'm willing to take a shot, right? But this one fights small triggers, which are up, but it's already retested it. I'm coming from a good top. The momentum is down. And then that gives me the opportunity to at least have a fighting chance. Did that make sense, Pedro? Split triggers at least gives me a fighting chance. I hope that's helpful. Awesome. Dude, you're asking amazing questions. And I'm telling you right now, be selfish, guys. Get in here and ask every question because your trading is the most important trading in your life. Gary, you get in at the one spot. If it's going to go, that's where it's going to go. You get out at the triggers, make a couple ticks. Gary, you're in conservation mode right now, aren't you? You're like, I'm just going to take little snippets, but I'm not giving it back. Nice job. And then Ron, probably a chili dog. Oh, there's that second divergence. Oh, the counter trend white bar really shouldn't work trade. And you wrote it on your chart. I love it. But what else do we notice about it? It's a pivot stop out. It's weak triggers, right? It's at a termination condition on the large chart. Ron's been doing a lot of study that says that second divergence usually hits the reversal bar marker. Nice trade, Ron. Totally pirate. And I'm going to tell you guys right now, there's going to be 10 of you in this room that try this and screw it up and wonder how Ron does it. Ron does it because he's been taking pictures for the last 3 months on it. Safia, going to wait for the reversal bar to change and then enter. So Safia, dead end determinations, right? 100%. Didn't let him break and pull back to him. Traded directly into them. Fibonacci support, triggers roll, gap in the triggers. Well, this is what I was talking about with Pedro, but Pedro's not running all the synthetics, right? I don't have all my synthetics on there. But you went short directly into support, right? And you went short without momentum. The small triggers were up. Yeah, great save. That's that patience piece. You're also on the wrong side of your supers there. Hope trade. Absolutely. And the triggers are split, right, Pedro? But what we talked about was if you don't know if it's going to go up here or down here, at least you have a fighting chance with a reversal bar. And now, but look at this. We've got divergences, split triggers, smalls caught in between the two. Ah, it's ugly. It was. It's the same look, but except you had 1,000 levels of support here. I didn't because I completely jack up my charts all the time. So while I didn't have an indication that that short had no prayer, you had a great indication that that short had absolutely no chance. Does that make sense? Awesome. I did, Debbie, and we all sang your praises. It was beautiful. Pull back to support. Odds favorable. Let me see if I can find it. You were there for the first feedback, though, where I tried my best to ridicule you and beat you down and tell you that you're worthless. You caught that, right? I'm just kidding. I don't think I could ever do that. There's no way I could do that. First one was beautiful. In your exit, excuse me. Oh, 2-year-old. And that's stop placement, right? That's a stop right where the market should continue. You knew that. That happens when you're babysitting a 2-year-old. And then beautiful recovery back in at the area and just outstanding trading, Debbie. Guys, one thing I want to say, and I don't know if you've ever noticed this, every one of Debbie's trades look exactly the same. 95% of Sophia's trades look exactly the same. Well, now 43% of Ron's trades look the same, but usually it's 98%. There is a definite recipe for success when you are trading, guys, and it's do the same damn thing over and over. Let it be proven to win more than it loses, and do the same darn thing over and over. Odds favorable, clear path, pull back to the area. The more variations you throw in there, the more chances for things to go sideways. Paul, you took a shot, it didn't go. Quick profits, now out. Nice trade. Consistency is huge, guys. That's 99% of it. Being able to sit on your hands and do nothing when there's nothing to do. Cav, what do we have? We've got support that held. I'm just going to read your chart since you're not annotating them, right? Support held, triggers stayed up. They're not wide. That's the only thing that I noticed right off is they're not wide, um, and they're trying to break through, right? A little bit of divergence and flat triggers. You take the best entry. If that one's going to go, that's where it's going from. It just didn't. That's it. Just didn't. Those triggers are kind of sketchy though on the ES, aren't they? Look at the difference between them, and nothing against your trade. I think you gave it the best chance of success, right? No worries. Pull back to the one-to-ones. No, I see it. And the large chart looked good, didn't it? You have an uptrend. Everything's clearing. You're coming from support. There's a gap between the two. After the fact, you can see these flatten out, but during the trade, they look solid. Momentum didn't make it. Just didn't work, brother. That's it. It's okay. You knew you had advantages, right? You lose a lot of these trades. So what do you think went wrong? Why did you lose a lot of these trades? Do they all look the same? That's my first question is do they all look the same? The market does hate you. The market doesn't give two shits about you, Cav. It's a true story. Doesn't care about me either. The market is what the market is. It doesn't care. It doesn't care what you do. That was the S&P. Oh, that's gold. I don't have gold. Gold is an angry redhead anyway. No offense if you're redheaded in here. Gold is temperamental. How do I know gold is temperamental? Well, I've tried to trade it with no success. But look at this nonsense. 50-50, strongest triggers, everything. And look where it pushes to the middle of freaking nowhere, right? And then nothing matches up and it pushes and it hits resistance. And everything says resistance should be solid and it turns again from the middle of nowhere. And then it finally goes up, right? And turns from the middle of nowhere. Guys, gold's a pain in the ass. Um, I think the NASDAQ is too, don't get me wrong. Cav, I blew out 6 or 7 Apex accounts trying to learn how to trade the NASDAQ. Gold is either, and Paul, if you're in here, back me on this. Gold is either fan freaking tastic or it's this all day long. Um, you know what flows pretty well usually? The S&P. Absolutely. BS hates Mondays. Here's a suggestion, not advice. Pedro, crude oil and the S&P are the easiest. NASDAQ is a crazy, crazy psychotic killer. It's who the talking heads sang about. Large chart rules don't change, guys, ever. Large chart rules don't change. Safia, so Cav, there's the trades you're taking are nothing like Safia's trades. What you guys don't see, you see Safia posting winners. What you don't see is the 11 months that Safia spent learning the basics and then turning that into, oh, we already talked about it, Dwight. Sorry. Can't go back, man. You're done. Never giving you feedback. Just kidding. If I'm not mistaken, you showed us some cool stuff. So what you guys don't see, these people that are successful over and over, guys, these people spend 11 months, 6 months studying the same damn thing over and over, taking 1 million pictures, asking 1,000 questions. And Safia, if you look at her trades, and Safia, I apologize for throwing you on a pedestal real quick. Safia's trades don't look anything like high probability trend trades. They don't look anything like what we teach in the class. So she did all this crazy study, right? So that she could find that one that she was super comfortable with. Um, and Cav, your reads are good, brother. They're so good. So let's talk about NASDAQ. Let me do Dwight's because he missed it. Um, Dwight, killer moments or momentum, support holds. Everything's railing, right? It hasn't broken yet, but super strong triggers, and you take the perfect entry, Dwight. And you know that these areas haven't broken yet, and you know the small triggers, and you get paid right at the trouble spot. And Cav, this is absolutely brilliant. Or I'm sorry, Dwight, this is absolutely brilliant. Nice job. So Cav, when we talk about NASDAQ, and I want to talk about NASDAQ with you guys, because a lot of us want to do it. And the idea is that people think, well, there's going to be more opportunities in NASDAQ, so I can make more money. But every opportunity to make money is an opportunity to get your ass kicked if you're not doing it correctly. So, Cav, when I trade the NASDAQ, And guys, this is not trading advice. This isn't next gen rules. This is from my own study. This is from my own personal trading. This is how I trade the NASDAQ. And I love to share it because I believe in it. And I believe that it does work. Um, the large chart still has to lead the way, guys. And I can't stress this enough. If you're fighting triggers on the NASDAQ, it's going to humble you. If you're fighting termination conditions on the NASDAQ, more often than not, it's going to humble you. And this is, I'm talking about trend trades, Cav. That's it right now. You have to let the large chart lead the way. You have to let the large chart give you momentum. You have to let the large chart give you a clear path. The only difference for me in trading the NASDAQ is where my entries come from. Um, because what we find on the NASDAQ, first and foremost, Cav, on the NASDAQ, your large chart is a 34, not a 13. Your small chart is a 13, which means that there's a lot of information that's happening on that small chart, and there's a ton of information that's happening on the large chart. Does that make sense? But it's a higher time frame setup because it slows that market down. Because if you tried to trade a 13251 on the NASDAQ, I don't think anybody's eyes would ever keep up with it. So when my large chart says go, my large chart is like, all right, Mark, rules 1 and 2 are met. Let's look for a trade. Um, this is what I'm looking for on entries. I wait for the reversal bar. I identify my window of opportunity. Everything is 100% the same. And let's see if we can find an example um, in the NASDAQ. Where is the NASDAQ? There it is. So NASDAQ is kind of weird today. It's been that straight line, hasn't it? So let's go back to 1010 real quick. And this is a great example. So Cav, we've got momentum, right? We have a clear path. Everything says up. And I wait for the reversal bar. And at the time of the reversal bar, I look, where's my areas inside of favorable large triggers? So none of that changes. And you're comfortable with that process, right? I know you are because you nailed those one-to-ones right at the favorable large triggers. So here's where NASDAQ changes a little bit. Oops, on the NASDAQ, these small triggers, when looking for a long trade, can act as resistance. Looking for a short trade, they can behave as support. Does that make sense? So see how they behaved as support right there? See how they behave as support right here? Are you getting that part of it? Because this is my entry rules for my own personal NASDAQ trading. Okay, cool. And I'm gonna tell you, Cav, this takes some practice. It really does. But I'm excited about it because once I figured it out, the NASDAQ got a lot easier for me. So when price gets to my area for entry, um, all I'm doing is I'm looking at my small trigger relationship to this reversal bar marker. And for a long trade, Cav, if they remain above the reversal bar marker, I enter at the area. I say, yep, let's go. Because I've got all these rooms, just like the gap theory, to close the gap back to the small. And sometimes it's going to be so close that it may be a judgment call. And that's one of the things about the NASDAQ is you've got to be fast to trade the NASDAQ. And the flip side of that is if it's below this reversal bar marker, I just sit on my hands and I wait. Because if the small triggers are not a full bar away, they have the potential to behave as support in longs and resistance in shorts. And notice how bounce right off the smalls, bounce right off the smalls. And I never get a close below the small triggers until all the way up here. And that's my entry condition, is in order to take this trade, if the small triggers are below, I wait for a close on the correct side of the small triggers. It's really that simple. But there's something that you have to think about there as well. Is it worth the risk if it's $200 away, right? If you're not a clear path, is it worth the risk? If you're so far from the areas that you should be trading from, is it worth the risk? And sometimes you have to say, it's just not worth the risk for me to take this trade. And that's where the patience comes in because you're looking and you're excited and you're chomping at the bit. But suddenly I've got $200 per contract on a trade that isn't perfect. Um, so let's go through some of my NASDAQ pictures. The trade side, Bobby. Um, so here we go. I'm literally waiting for my close. I want to go short, right? Because of odds favorable, because of everything going down. I want my close to be on the below the small triggers. So when I say a close on the right side, thank you for asking that. Um, I want it on the trade side. I want it on the winning side. So Cav, this is a great example. As we get into the area, the small triggers are super close and they actually end up acting as support. When I get the close below the large triggers, now it's manageable, my risk is established, and I've got tons of room to get to my target. Does that make sense, Cav? Awesome. Here they're screaming down. I'm not getting in at the midband. I'm not hoping. Um, Here they're screaming down. They're not a full bar away. Where they were a full bar away, look how they acted as resistance. Pushes down. I don't take this trade. So I eliminated, I kid you not, Cav, I eliminated at least 60% of my losers through incorporating this. Um, and that helped me a lot. And I've got, if you look on the spreadsheet that I give you guys, um, there's a yellow section on the third tab that's called NASDAQery. And it's all the stuff um, that I've done. And then here's the other side of that one, is when the large chart leads the way and says go and I'm looking for an entry, if my small triggers are a full bar away, then I get in at the area. So I get to the area, the smalls are below the reversal bar marker, I get in at the area. Because what it does is it gives me time to go back and test them. Here the smalls said wait, and I don't take the trade. And then here, now go. Let me pull this up. Well, I need a down bar for it to happen. And of course, this is into a termination condition, right? So let's say hypothetically, and I'm not saying that this is a trade. Please understand I'm not saying this is a trade. Here's my reversal bar marker, right, Cav? In order for me to buy at the area, my small triggers have to be above it. Because the small triggers are below it, I absolutely positively refuse to go long here. And all of this says don't go long too, because what happens is when the smalls are down strong and close to the area, it can push lower. The small triggers do that on the NASDAQ. So if I'm waiting to go long for some reason, see where my reversal bar marker is? So Cav, I changed my charts 1,000 times for this class. How can your triggers not be the same as mine though? Show me a picture. Let me know what you're working with. And let's see if we can get you fixed. But see how there was never any sort of close on the correct side? And of course it's not a trade, but I'm using that reversal bar marker the whole way down to try and gauge it. Here, if we took the first shot, see how there was room to make a full bar back to them? I would have gone at the area. That's a great example. Here, not a full bar. I would have closed. I would have waited for the close. You don't even have synthetics on yours. Yeah, they're very different. So let's do this, Cav. I want you to right click and I want you to go to reload all historical data. And be patient as your charts recalculate and let me know if that fixes it for you. That's the first thing to do. But does that make sense on the lesson? Never fight the smalls. That's been the one that has saved my bacon on the NASDAQ. And then Safia says this was a lesson. The example of what did we discuss on this one? All right, so Cav, your next step is to right click and go to templates, load template, and go to NASDAQ 13.2. And let's reload the template and see if that helps. And you may just need to build a new chart. Waiting for the correct side. Let's see, Safia. You went long? I can't tell where you entered though. You waited for it to get on the correct side of the trigger? And then you went long directly into the termination condition? '93. No, Safia, you went long on the wrong side. Not correct. Small triggers were coming down. They were less than a bar. That's okay. Entering on the correct side of the triggers would have been up here at 98, where they close on the correct side of the smalls. But you don't take trend trades, Safia. You don't take high probability trend trades. So it really doesn't make sense for your plan at all. But what about all these lines? Made you feel like that one was going to go up because of support holding? That's a lot of terminations, Safia. And they all held 100%, rule number 2, right? Then Gino, entry on pullback, strong bottom. You got in down here at 36. Not odds favorable momentum, but everything says up, and you get out right as divergence prints. Nice trade. Everything set up and you went up. Awesome, Gino. It's crazy how that works. And look at that. From fib to fib. Know what stinks? Is they didn't give anybody an entry, did they? Bummer. Sometimes it's not your money. But if you were thinking that you were going to go short here, so Safia, let's use this one. And then Cav, this is good for you, all my NASDAQ traders. Let's say that your brain said, man, this is such a good top. And I know that there's a fib here, but because of this, I'm willing to trade into the termination condition where the rules aren't met, even though I know that this may reverse the market, right? Did I sell rule number 2 enough there? And you were saying to yourself, I'll try this mid band, right? So Cav, when we get to the mid band, do you see how close the small triggers are? That alone keeps you from just arbitrarily selling the mid band, right? And look what happens. They act as support, potentially acting as support a second time. There's your first close. So Safia, that's your close below the small triggers. At least here you have a shot with confirmation, but you're still into a termination condition. Does that make sense? what the correct side of the small triggers means? If you are committed to this trade, that's the one. And the cool thing is a reversal bar means that you already have your risk. So now, of course, you get stopped out because termination conditions win. But that's if the rules were met, if the large chart led the way, that becomes the entry that keeps me from hoping all the way up. Does that make sense, NASDAQ traders? Same rules, same large chart rules. Rule number 2 says don't do it. But at least I don't do it 3 times, right? I'm not doing it 3 times. And then if you're just stubborn as all get out, let the small triggers roll. Get all your charts green again, or red again, but man, there's no areas. Oh, it's just ugly. The thing is, you just got to realize it's not all yours. There's a bad top directly into support. Rule number 2 says support's likely to hold. I'd have to see a picture, Safia. Gambling is tough. And the great thing is, guys, is we'll tell you if you got lucky. We'll tell you if you're gambling. We'll tell you if there's just if you're hoping, right? If you're hoping. Look at this nonsense on crude oil. I don't have any rules met. Look at those ugly stinking triggers. Waiting for the breakout. Terminations for the win. So Safia, you went long right here because of the blue line and divergence? Or I don't know, Gino. Show me a picture with your rules written on it. I don't give trading advice. I don't tell you when to enter the market. I don't tell you anything. What do the rules say? The rules say you have momentum into an area with the large triggers a full bar away, which means I have terminations twofold right here at this line. Do whatever you want. If it fits your plan, cool. It doesn't fit mine because that's a termination. I'm willing to miss it. If I go to the high probability trend trade checklist, I don't have an entry. I don't have areas inside of favorable large triggers. I don't have a clear path. I've got the gap theory in effect. So are my rules met as a high probability trend trader? Absolutely not. Are my rules met as a medium probability 50-50 trader? Absolutely not. Do whatever you want though, right? Does that make sense, Gino? I'll never tell you what to do. That's not my job. My job is to identify odds favorable, to identify a clear path, to identify the area of resistance inside of favorable large triggers, and take this if it fits my plan. Does it fit my plan? Market coming from a good top, that's a yes. Odds favorable, for sure. No terminations, none there. Area inside of favorable large triggers, yes. I know no matter what happens in this trade, this is a setup that typically wins 70 to 80% of the time. This is a trade that I'm obligated as a rules-based trader to take. But now I'm powerless. It's either going to get me or it's not. We'll go 2 ticks below the area of resistance. If I get into it, where shouldn't the market go? Somewhere up there, 8 ticks off into the distance. Does that make sense to everybody that's brand new? Momentum in a clear path has me looking for a pullback to an area inside of favorable large triggers. If the rules are met, man, have fun, Ron. I'm at the mercy of the market now. That's it. Oh yeah, everything says down and you went long. That's gambling. 100%. 100%. Bad top, screaming to the downside. You're just hoping. Yeah, it happens. Look at that. Is this trade over? Or is there always the potential that with the momentum and the clear path, it might come back up and get me? A lot of people jump in down here, fearful that it's not going. Guys, I'm telling you right now, professional, mature traders don't chase trades. They just don't do it. All right, guys, that's it for me today. Gino, I hope that answered your question. I'll never tell you when to get into a trade. We'll look at whether or not the rules from the simple plan are met. Support for the win. Is it going to close that gap? It might. Guys, thank you so much for being here today. I had a blast. I don't know if you did. I had a great time. New users, keep those questions coming. Old users, keep asking, right? We're just going to get better every day. Gonna get better every day. So thank you so much for being here, guys. I'm going to be back tomorrow morning. We're going to do it again. We're going to do it again on Thursday. And then Nexgen's going to take a day off on Friday. We have something that we have to tend to in Houston. John and Melinda will be flying in. I think Mark Dean's already. So, Friday, there will be no class. And then Cav, that's that momentum style, right? You're banking on it and you're getting out where the trouble is. That's a pattern. We see it all the time. I love it when you guys wait for me to leave and you're like, all right, let's go. And Gary, termination, that's that momentum style. Momentum in, momentum out, right? Almost an HVA. Good one. Guys, great trading today. Solid trading by all of you. Gap theory still in effect. Let's see if it closes the gap to those large triggers. That's a pattern. Guys, I will see you tomorrow. We're going to do it again. We're going to have some fun. Thank you, everybody, for being here.